Welcome to a little bit of an introduction. If you haven't seen one of our shows before, my name's Tony Sutton. I'm the Managing Director of Specialist Financial Services Limited, and I am your host for today. Can anyone hear me now? Yes, they can hear me. Right, okay. Bear with me 1 second, everyone, because I've just got to get rid of some of these screens that have popped up.
Outside of it.
Okay.
Click on the top window.
Right, can everyone hear me now? Apologies for that. As I always say, we are reliant on the outsourced technology. My Chinese-made microphone decided to do something quite weird halfway through me actually my first sentence. So I'll go back. Let me just get myself sorted. Panic over. Okay, so my name's after almost 6 years with a specialist lender, I started my own brokerage at the tender age of 25, all the way back in May 1989. Grew this from a two-man operation, and now my clicker's not working. If it's going to go wrong, it's going to go wrong today by the look of things. So let's try that again. No, it's not having any of it. Okay, so I'm going to use the mouse. Right, okay. Grew that from a two-man operation to having 141 employees at its peak, but I left in 2004 after a very bitter dispute with my former business partner, who went bust 8 months later, to set up Specialist Financial Services Limited. And on the 22nd of November, it will be 19 years since I first started. Traded very successfully for 4 years until the crash took all our lenders away. I've stayed with the market throughout. Obviously, here we are today. I don't really know anything else. Really want to try anything else. I've enjoyed the years what I've done. I do find it's become more and more difficult. Technology is supposed to make things easier. I've certainly found over the last couple of weeks it does anything but. Okay, so here's my. We always have a claim to fame. Well, I haven't got that many claim to fames. I certainly haven't got a 10 or what would it be? It would be sort of like 15 claim to fame. So I had to add in a couple of claim to shames. This, as it's the last one of the year, this is my worst ever claim to shame. This was absolutely the most embarrassing moment of my life, or moments, because it continued for quite a while. So all the way back in 1997, business was flying. We were doing loads and loads of business with First National Bank, and I was invited to a charity cricket do down somewhere south of the river as a non-playing guest. There were various teams of 6 playing, and each team had 2 very, very famous, if not world-class cricketers in each team, such as Phil Tufnell, Mark Ramprakash, Malcolm Marshall, Michael Holding. I was there for the free food and the wine, maybe see if I could get something in the charity auction. And I think I was on my 4th glass of wine when what happened. Over 1,000 spectators watching as well. So it was a very, very well attended event. So an hour after arriving, there I am on my 4th glass of wine. I was told I'd have to play because First National's team was 3 players short, and I would have to bowl one over. And I hadn't actually touched a cricket ball since I was at school, and I left school in 1979. So what happened next? I was so nervous. My turn to bowl. I was facing an ex-England batsman. My first 4 deliveries, he knocked me out of the park. My next 4 were declared wide because I started to panic, massively started to panic. I could see the players were becoming impatient. The crowd were really becoming impatient. There was a little bit of booing going off and slow hand clapping, all sorts of stuff going on. So I asked the umpire if I could bowl underarm. Biggest mistake of my life, because he very, very loudly advised the batsman that was my intention. And there was a silence fell across the ground. And then the booing really started. Every player on and off the field was looking at me, shaking their heads very slowly, and all the crowd eventually started booing. And my final delivery rolled along the ground, and I received a warning from the umpire. Okay, it hasn't finished yet. Hasn't finished. Let me just get the next slide. I was finished my over. I think we lost the game purely because of the amount of runs off of my over. I was sent to the boundary to field, and the next over, the ball was hit towards me. I got down on one knee to collect the ball because it rolled on the ground. It hit a divot, bounced up, and hit me straight in the gentleman's area. And I was then writhing around on the floor in pain. And the boos turned into laughter, and you've never heard laughter like it. It's the only time I've ever made 1,000+ people laugh that hard. And I made a hasty exit shortly after. I didn't stay the day, as you can imagine. It was that bad that 4 years later, I was at another lender event, and I was standing next to a group of blokes. There was 8 or 9 blokes. One of them was telling the story of this guy that bowled underarm at a charity cricket do, and then got hit in the you-know-whats when he was fielding. And even then, the laughter came back again. I thought, I'm never going to get away from this. But there you go. Probably the last time I'll ever tell that. So there we are. Our sponsor this month is Quantum Mortgages. A big thanks to them for their help and sponsorship. And they are our first speaker that's up. This is, if you can't hear or see us, there you go. Just go to the message. You know what to do because you've already done it, most of you. Go to the message box in the bottom right corner. If you still use Microsoft Internet Explorer, we're going to have a whip round for you to buy some new software because it won't work. And you will definitely lose sound, and that won't be our fault. And you will experience lots of other problems. And as I've said before, we are depending on outsourced technology such as Chinese microphones and Chinese cameras. So please bear with us because things do sometimes go wrong. If you have a question, go to type your message box in the bottom right corner, and we will try to get to all the questions we have in the time we have today. Okay, so today's specialists, we have pictures of each. I'll show you their logos in a moment, so you might recognise the logos a little bit better. Claire Flanagan, BDM for Quantum Mortgages. James Green, BDM for Dudley Building Society. Stacey Woods, Head of Intermediary Sales at Selina. And Samantha Dance, BDM at Glenhawk. And here's the logos, because you might now recognise who these lenders actually are if you don't know them. And they're set. The first one's set at 10:15, so I better hurry up and stop talking, because otherwise we're going to be late. But that's our show for today. Objectives of always detailed product knowledge for different areas within specialist finance, such as specialist buy to let, resi first charge, resi second charge, and bridging loans. Each presentation lasts approximately 20 minutes. There's a 10-minute Q&A session after each session, so get some questions prepared. And as I always say, the speakers have set themselves questions. So, and they're only because we don't get asked any questions by the delegates. Don't give them an easy ride. Please try and think of some questions and ask it. There's no such thing as a stupid question when it comes to these shows. Ask away, please, because it's very, very important. Feedback and CPD. At the end of today's show, you'll be sent. You'll go to a feedback form. Please, please, please complete it. We had a record number of completions of feedback last month, which was great, and got some great suggestions as well, which we have taken on board and will be looking to incorporate from next year. And we also ask you to rate each speaker as well for their presentations, just so we know how they got on in your eyes. They're not in our eyes, but it's very important how they got in your eyes. Feedback and the CPD will be emailed to you by 5:30 tomorrow. Please check, and I will probably say this 3 times throughout today, please check your spam folder if you haven't received it, because 99% of the calls we get where it hasn't been received, it is sitting in your spam folder. So check that first, make sure that it's not sitting there, add it to your safe senders list if it is, and then you'll have your CPD. Our updated prop fee guide is available. You can download this at the end of today's show, or you can access it basically from our website, however you wish to do it, but that's available to you. GDPR certificates are still available. We've now been running these for, what is it now? Almost 6 years it is now. But these are, if you're one of the 50% of companies within financial services that have never done anything at all on GDPR, this is just your safety, a part of a safety net, should you ever get a visit from the regulator or from the ICO because you've been hacked, because you clicked on a dodgy email. This will at least show you've done something. Very, very easy to use. And I didn't write these. I just copied and pasted from the ICO website. So they should be correct, but then who knows? But it's a good idea. We've now got one of these, the annual one that we do every year. It takes literally 5 minutes to do, but at least we can show that we've done something. Consumer duty, I'm not talking about it anymore because I'm bored with it, to be honest. I think it's been an absolute nonsense. It really has. But if you want to watch on catch up, you can do so. These are some of the shows we've had this year. Our show that we did all the way back in May, I did this with Robert Sinclair, our most popular event ever. It's now been watched several hundred times on catch up as well. And you can just go to our website, Specialist Hub, click on Sutton and the Specialist, and it has all the previous shows. That was the one he did in May, and that was obviously prior to Consumer Duty. And then last month, Robert did the post-Consumer Duty follow-up. How did it go? And that probably had some of the best feedback we've ever had on any show we've ever done. So if you haven't seen it, I urge you, obviously you get CPD as well, which is mentioned in a moment, but I urge, have a watch of it. It's an hour of your time. That's all. for each show. So have a look. Other shows we've done, those of you that know Roger Morris, fantastic speaker, very knowledgeable, basically what he does, he's probably the best in the business. Reimagining of the remortgage process was his topic all the way back in March. That's also available on Catch Up if you want to watch that. Some great little tips in there for things such as no solicitors involved on remortgages, for example, which is something that his company Tandem have brought out, which is a fantastic way of working, fantastic product. Then in July, I sat with Grace Bennett from the Family Building Society going through some of their product range. Again, there was some that we received a lot of business from that, because there was a lot of business that we found delegates were unable to place, that all of a sudden they thought, hang on a minute, I've got a home for this. So again, have a watch. And then the last of the ones that we've actually done, this was EPCs, the real story. So much misinformation was being spread about EPCs. It was an absolute disgrace and could have led some brokers to be sued by customers in the future for giving them completely the wrong advice. So again, urge you maybe to have a watch of that as well. It's another hour with Roger, and that again, very well attended, and feedback was absolutely fantastic. Our last show of 2023 is this one. For those of you that don't know this guy, this is Colin Sanders, who I met all the way back in 1989 for the first time. He just joined a lender. He was joined as a BDM. Really, really nice guy. He had a full head of hair. And then the company he was working for, which is called Consumer Loans Company, which was part of National Home Loans, obviously disappeared. But he was kept on. He was one of the people that kept on to work their book. And he then rose through the ranks. And as you can see, his rising through the ranks from the bottom up, he became CEO of iGroup, for those of you who have been in the market long enough. He then became CEO of GE Money Lending, which was pretty much them and GMAT were the largest lenders in the country at the time in the specialist space. CEO of Money Partners, CEO of Omni Capital Partners, the bridging lender that was set up by the Candy brothers. And now he's currently CEO of Tuscan Capital. This guy, there's nobody in the business that knows as much as this guy, as far as I'm concerned, because he's done every single part. He's been a broker, he's been at startup lenders, he's sold out 4 times to different companies. He's done incredibly well for himself. And this guy has knowledge like you wouldn't believe. So I urge it, again, book that one. It's available to book on the website, or you can book it after today's show on the links. And remember, where am I? Remember, yes, you will receive CBD for every show you watch. So it's so difficult doing these when you're clicking a mouse, because you have to keep looking at the screen to actually change what you're changing. So this month's prize draw, as well as our sponsor, we've got a prize draw later on today. You can win one delegate, will win 100 quid in Amazon vouchers. So stay with us, because you have to actually, if your name is pulled from well, it's not pulled from a hat, but if your name is called, you have to actually acknowledge it to win. And there's been a couple of occasions so far this year where we called out a name and that person's been on the toilet, or maybe gone and done something else and had it on so they could get their CPD, and they lost 100 quid. And one last thing before we go on to our first speaker. If you're one of the 11% of FCA authorised brokers that are just sick to death of what's happening in the market, and you're getting to an age where you think, do you know what, sod this, I'm going to retire, and you're going to leave the industry, obviously lapse your permissions and everything else, because you just had enough. And I'm getting 2 calls a week at the moment. Give me a call, because we can actually offer something to you. I'll give you an example of one guy that's now been using this. It's about 18 months, 21 months he's been using us. He's 50 odd years in the business, has seen it all, done it all, was earning a very decent living from financial services, concentrated on mortgages, used to use us on occasion for the specialist stuff that you couldn't get through. And then he just thought one day, do you know what, I've had enough of this. So he packed it in. But his clients were contacting him constantly, saying, can you do this for me? Can you do that for me? So he gave us a call and we started something up with him. So he now earns more than he did when he was actually trading and authorised by the FCA. He's earning more. And he's got none of the stress, none of the worry, none of the hassle, none of everything else that goes on having to be an FCA authorised broker. And he's loving it. He's absolutely loving it. He's now in his late 70s and he can do whatever he wants to do. He makes 1-2 phone calls a day and that's it. That's all he has to do. And he just sits back and waits for the money to come in. Give me a call if you're thinking of doing the same. Okay, first presentation's about to start. Get yourself comfortable. I'm going to go and work out why my mouse clicker isn't working, but our first speaker will be with us in any moment now. And I see she's joined the room. Hi, Claire, can you hear us?
Morning. Yes, I can.
Excellent, excellent. We can hear you loud and clear. Okay, I'm a little bit behind schedule, but we're fine today because my end one isn't going to take, my end presentation is going to take anywhere near as long as possible. So it's the first time I've met Claire. Because she's just become our BDM, literally just become our BDM. And also, I would love a virtual round of applause for Claire because she stepped in right at the last moment. This was supposed to be presenting today, was supposed to be the sales and marketing, I think it's sales and marketing director, Spencer, but he's had a family bereavement. So it's been fairly short notice. Claire's been sort of put in. So a virtual round of applause for Claire, please. And let's wish her the best because I'm sure, is this one of the first ones you've done, Claire, or?
It is the first.
It's the first, okay. So everyone, be gentle, please. Be gentle. Honestly, Claire, they will be. There's no problem.
I am actually joined as well by my colleague Paul. So he's got a lot of. I think he might be available on the chat or something like that. So for any sort of questions we've got at the end, he'll be your guy, hopefully, to answer them. So
you've had lots of delegates give you virtual rounds of applause, like emojis with applause.
Thank you, everyone.
And there's one that appears to be praying. So
oh God, pray for me.
Okay, so everyone, you should have received this morning Quantum's product guide outlining exactly what they're able to do, and this is what Claire's going to be going through today. A little bit on Claire. With an extensive background of more than 15 years in the financial services sector, Claire's career spans across notable roles at Nationwide, Unum, I never know how to pronounce that, Unum, and most recently Insure. Her track record is testament to her proficiency in fostering growth and her exceptional ability to recognise prospects through close collaboration with mortgage firms, all while cultivating robust partnerships. Where Claire's role at Quantum involves educating brokers and firms about the company's unique proposition and to help them understand that Quantum can lend on those more complex buy-to-let specialist cases. Claire loves to spend her free time with her other half, their 2-year-old son Finley, and their dog and cat. She loves seeing friends, going on lovely holidays, and a good coffee. Gingerbread latte is a firm favourite at this time of the year. Never tried it. So
got one on the ready.
Although we do have some like 17, 18 coffee shops in Berkhamsted, so I'm sure it's readily available. We actually had 3 Costa coffees in Berko, including 2 next door to each other, believe it or not.
Jesus.
So obviously a lot of coffee is drunk in Berkhamsted. So Claire's interesting fact, that should say claim to fame. My apologies, I did these late last night, so that should say claim to fame. When Claire was younger, okay, it was me giving that story about the cricket. And what's the first thing that we given? When Claire was younger, she stayed in the same hotel in Australia as the England cricket team, most of which have laughed at me, by the way, more than likely, and met Ian Botham in the lift. So there you go. Now, 2 new slides, not done these before because I just decided last night this might be a good idea. Why you should watch this, just in case you think they're going to make a cup of tea or something. Because there are some great stuff coming up. So Quantum Mortgages, pound for pound remortgages with just 100% rental cover. Products that cover some of those applications you couldn't help over the last few months. And that's where we're getting stuff away with Quantum because there is business that people come to say, oh, I didn't know we could do flats under 30 square meters. I didn't know we could do flats with deck access. I didn't know we could do this, didn't know we could do that. And because we are an approved packager of Quantum, you can earn up to 0.7% of the advance on the day of completion. No waiting for Legal and General Mortgage Club or Simply Biz to get round to paying you 6-7 weeks later. No, you get paid on the day of completion. Doesn't matter when we get paid, we pay you on the day of completion. So sit back, watch, enjoy. Claire, it's over to you.
Thank you. Thank you very much for that lovely introduction. So, and thank you for having me here today. It's really, really great to be here. So I'm very, very happy about it. So Quantum Mortgages. So I have been here myself just 2 to 3 months now, and it's just fantastic. And I'm still sort of mind blown at how much we can do in terms of lending. So I guess with us at Quantum Mortgages, it is really a common sense approach. We're a buy-to-let specialist company, and we're really sort of there for when the high street does say no. So just to give you a bit of an introduction, if you don't know a lot about us at the moment, so we are a buy-to-let lender, as I said, and we cater to the professional and experienced landlords in England, Wales and Northern Ireland. So we can't lend to first-time landlords. So that's probably one of our main key things to sort of remember. They do need to have that experience. But as long as the landlord has owned at least one buy-to-let property and has 1 year's market experience, we can accommodate individual applications. So that's limited companies, including newly formed SPVs, complex company structures, portfolio landlords, and also trading companies on our QML Pro range, which I will go through with you shortly. So with a lot of lenders, they do chase more of that automation, and it is more of a computer decision. So, you know, it might be that they can see that there's potentially, you know, bad credit or something like that. And a lot of lenders will say, no, don't want to look at it at all. We do have, as I said before, more of that common sense approach with it, and we are here to do things differently. So we're here to sort of reduce the cost, maximise that tax efficiency, as I said, that common sense approach to circumstances, because we do have that human decision making in the background. So our underwriter will look at the case and they'll sort of say, right, can we do this? Is this something we can do? Rather than having a look at it and sort of writing it off straight away. You know, if there was, you know, a credit issue or something in the past, they might say, right, why was that? Why did they miss the payment? Why was the payment late? Was there a reason for it? You know, and if, you know, there is a good explanation, for example, then we can certainly review that. So our target market, so professional landlords, as I said before, and I'll probably repeat myself quite a few times with that, but that's buying or refinancing investment property in England, Wales and Northern Ireland as well. Those complex company structures we'll have a look at. And again, I said to you, I'll say it, but experienced landlords who have held one or more buy-to-let properties with a minimum of 1 year's market experience. And we'll also look at those portfolio landlords too. So helping maximise profit. So obviously I won't read them all out to you, but a few different, you know, examples that we'll look at here. So the HMOs, we'll look at multi-unit blocks, holiday lets, and they include those Airbnbs as well. Studio flats, and you know, we do go below that 30 square meters. I think Paul had one actually quite recently that was very small, I think in sort of central London, but I think, correct me if I'm wrong, Paul, it was 9 square meters or something. So when we say we go beneath that 30 square meters, we really, really do. Different tenancy types. So we'll look at, you know, those vulnerable tenants as well. State supported tenants, DWP. And again, I'll run through it in a bit more detail, but also that QML Pro. So all tenancy types will be accepted on the QML Pro, except where there is an element of subletting or an absent freeholder. So how can we help reduce costs? So we can help by offering day one remortgages. So we do that up to 80% open market value. There's no need to provide invoices or proof of works, and that makes that process a lot more streamlined and efficient. TR1 forms are accepted. So we accept the TR1 form, simplifying the transfer of legal ownership during the mortgage process. So that's, you know, a really sort of big USP for us. And that enjoys a seamless experience again, which everyone wants, don't they? No compulsory legal advice. We don't have a restriction on the panel either. So the borrowers do have the freedom to choose that preferred solicitors or conveyancers too. So we can also help to maximise that tax efficiency, and we do that by limited company applications are accepted, but they must be registered in England and Wales. This is another sort of, again, big USP for me of the requirement of 51% of the shareholders to be on the mortgage application, and that allows us to consider those complex company structures. Newly formed companies are also acceptable at application stage, and SPVs under a holding company are accepted if the directors and shareholders own 100% of the SPV by way of shares. So lots and lots of different ways there that we can help to maximise tax efficiency. Then there is the source of deposit. So actually we're quite flexible on this as well. We're happy to accept parental and family gifts from pretty much anyone in the family, to be honest with you. Director loans, gifted equity, intercompany loans, and those builder gifted deposits. So I mentioned the adverse credit solutions earlier on. and we will look at those adverse credits. So as I say, the underwriters are looking at case by case. So if there is, adverse credit, for example, they will look into it and sort of see, well, how bad is that adverse credit? Can we review it? Let's have a look at maybe the credit reports and those sort of things. CCJs, I think on these they can have 2 CCJs, but I think it's £500 in total that they can be in terms of the amount, and mortgage arrears as well. So as I said before, we'll have a look at it in the whole, because there might be a reason for it. There might be that they've, I don't know, changed their bank account or something, and something hasn't gone out of one account, it's gone out the other, or something like that. But if there is a good explanation for it, we will of course review it, and the underwriters will review that. So I'm just going to touch now on, I'm not going to touch, actually, I'm going to go into quite a bit of detail on our products. So we do offer quite a few different products here at Quantum Mortgages. So our product ranges are designed to suit the diverse needs of landlords. So we have 5 product ranges, depending on the needs of your clients. So beginning with our single unit range. So this caters for the standard single unit property, such as houses and flats, with a single AST or corporate let. So within this range, we can capital raise up to 80% LTV for any legal purposes. And we can also refinance bridging loans with the day one remortgage. So this means that there's no need to wait for the normal 6 months ownership, and we won't even ask for proof of works that have been done. So we can also lend on new build flats with no limit on stories, including the modern type of city centre blocks that have commercial units on the ground level, and buy-to-let investment-led developments. So we can do, quite a lot. This is our sort of our first range, and as with all of our different products, we do require that experience. So they are required to hold 1 existing buy-to-let property with a minimum of 1 year's market experience. So moving on to our multi-unit range. So this accommodates HMOs, multi-unit blocks up to 6 units, and also holiday lets. So the rooms within the block can be of any size, and we do not average. So we will lend up to 75% LTV, and we don't require the landlord to own another HMO, as long as they have had at least 1 other buy-to-let property. So we can even lend where utility supplies such as water and gas are shared between units, and that would be up to 65% LTV. So that is our second product. So I mentioned holiday lets then, but just a bit more information on the holiday lets there. So pound for pound remortgage, 100% ICR, up to 70% LTV, with valuation fees refunded up to a maximum of £1,000. So the properties would need to be located in a known tourist area, and they would need to be listed on at least 1 recognised holiday let listing website. Holiday lets are available up to 75% LTV on a standard AST. And then there we've just got sort of the loan sizes as well, maximum loan. Again, with this, they are required to hold 1 existing buy-to-let property with a minimum of 1 year's market experience. Now, the specialist range. So I see quite a lot of these ones come through, actually, and it's a lot of the ones that were saying, yeah, we can do this. Well, me personally, anyway, I say a lot of the time we can do this, and it will sit on our specialist range. So this one, I see a lot of them coming through. So this is where you will find the property types that aren't normally available to your landlord. So as you will see on the screen, these types of properties are a little bit more specialised. We do rely on the landlord experience, and because of that, we need at least 2 buy-to-let properties of which they have owned for 2 years. We do require that sort of additional bit of market experience. So the maximum LTV on this range is 70%. And on this range, we can lend on a greater number of flats, including those above or adjacent to commercial premises. So that would include food and alcohol, ex-local authority flats, even with sort of balcony access as well. And we can also lend on those studio flats of any size. So on this range, we can accommodate the smaller loans, and we can also remove the maximum age restriction. We can lend on larger HMOs up to 12 units, and we can also lend on freehold properties in Northern Ireland. So for me, it's just what can't we do sort of thing. As long as they've got that experience, you know, we can pretty much look at anything. Not everything, but we can look at a lot on that range. And I just touched on Northern Ireland there, so I'll go on the specialist Northern Ireland products. So with the Northern Ireland products, they must have owned at least one buy-to-let for 2 years. And again, we cover off a lot on there. So freehold properties, including HMOs up to 6 rooms, multi-unit blocks up to 6 units, up to 70% loan to value, as I mentioned before, day one remortgages from bridging or development finance without proof of works, loans up to 500,000. Yeah, lots and lots and lots of things we can do there. So I spoke to someone yesterday actually, and they were like, "Oh, you do Northern Ireland?" And I was like, "Yes, we do." So yeah, we can look at that for you too. So expat and foreign national range. So this enables us to lend up to 75% LTV to a foreign national without any UK residency. So all we ask on this range is that they have some form of footprint in the UK in the form of another investment property. And they would need that UK bank account too. So we do require them to have that UK bank account. As you can see, these are different things that sort of we can lend on. Again, we look at sort of most things. And we do actually have on our website as well, we've got like a form, it's like a Basel risk index form, and it lists all of the countries on there that we're happy to lend on. I think if they're below 6, then we're happy to lend on them. So yeah, lots and lots to look at on that range too. And finally, so I think I said before that specialists, you know, we pretty much look at anything. But if we can't do that, we have the QML Pro range. So it is a more specialised product for properties and circumstances that do not fit the quantum mortgages criteria. So any property in England, Wales and Northern Ireland not classified as unacceptable and is in a lettable condition can be considered a maximum LTV of 65%. To qualify for this product, at least one applicant must have owned 2 investment properties with a minimum of 1 year's market experience. And as you can see on there, you know, we do the HMO and multi-units greater than 12 rooms or units. Properties valued at less than 70,000. We will look at properties with flying freehold, properties with single skin extensions, all sorts. We really do sort of look at anything. We've got that semi-commercial properties with a residential element between 50 and 60%. So if, you know, you're coming across anything and you think, oh, I just don't think it's going to fit, you know, we've got this range. So definitely, you know, go to your guys at Specialist Hub and they can definitely have a look at it, and hopefully we can help with that. So here you will see our maximum loan sizes and ICR calculations. So we only stress the background portfolio at 100%, at 6%, just to check the portfolio is self-financing. So this is really useful when you have had sort of landlords with low yielding properties but are stuck on a lender's variable rate because they can't remortgage. So I guess on this, just to recap, some of the areas we can really help to add value to your business by lending in areas where other lenders can't or won't help. So we have no minimum income. We can lend on studio flats that are smaller than that 30 square metres. We can lend on flats above or adjacent to commercial premises, which include food takeaways or alcohol sales. We can lend on those high yielding semi-commercial units. And of course, we have those day one rebridging financing. So we're a bit more flexible on leasehold properties, whereby we accept only 35 years remaining at the end of the mortgage term. So we can look at a lot of things for you. So yeah, hopefully you have found that useful this morning.
Very useful, Claire. Thank you for that, and well done for your
Thank
first
you.
one. Remember, I was like on my first one, I was absolutely bricking it. I really was shaking.
Oh, no.
Shaking, yeah. Now I just shake when the microphone doesn't work or something packs up or something goes wrong. So, okay, but thank you for that. Absolutely brilliant. There was some question. Now, those of you that might have been looking at the chat were thinking, "Who's this guy who keeps answering all these questions?" That's Paul Ormond. Paul is I'm not sure of his job title. Say everything with all this has been a little bit last minute because of Spencer's situation. He was being the one who was presenting. So. Paul was going to be just basically here to answer any questions that Claire might not be. So if one of you asked a question about what quantum we're doing 2 years ago, for example, Claire's not going to be able to answer that. She's not been here long enough. But he will answer anything that is anything that's a little bit tricky. There was Michael Ashcroft. Hello, Michael. How are you? Do Quantum do buy-to-let mortgages for multi-unit freehold blocks, which include a takeaway on the ground floor? And Paul did answer the question, so we don't need to answer that one. Yes, we do if the client has 2 buy-to-lets for 2 years. So there's one. I can't read that because of the print. Adedamola said, "What are your interest rates?" Just check what we sent you on email this morning, because that's actually the product guide that has all the interest rates. Everything's there pretty much that you need. And then we had another question. Joe asked, "Please, can you advise if you lend on broken freeholds?" Now, Claire, do you know what a broken freehold is? You can say no, because nor did I. This question was actually asked by one of my staff who's sitting in the next room. I had to just go and ask, what's a broken freehold? Broken freehold basically is a freehold block that has had properties sold off.
Fine. Yeah.
I would presume that's a yes. Paul, are you there, by the way? Because I think your sound has been turned on. No, that's not working today either. Okay. I believe the answer is yes to that. Just so everyone is aware. We don't have any more questions, so I'm now going to ask some of these lovely questions. Did you set these, Claire, or did Spencer set these?
No, Spencer didn't.
I'm going to be really. I'm not going to be mean then, and I'll certainly ask the first one because you're not going to know, or the third one really, because I mean, okay, the third question. Spencer set this for himself, and he's a sales and marketing director. He was there right from the start. What part of Quantum's product range has changed these past 12 months?
So,
you got.
Yeah, QML Pro. So when I joined, actually, that was in talk of like, this is our new product, and I think that's because we as a company we can lend on quite a lot of things, as I mentioned before, but the QML Pro really is sort of that real quirky things that you just wouldn't think you'd be able to sort of be we could lend on, sort of thing. So QML Pro is that for us in the last sort of, I think it's sort of last 6 months to a year. Paul may be able to correct me. Yeah, but QML Pro definitely.
Okay. Obviously,
and I see a lot of them and specialist. I see a lot come through. With you,
certainly we see, because we've got our own sourcing system, which I will talk about later, and we see a lot of cases come up with Quantum, and it's quite literally no one else to do that. I'm not sure if Quantum show on the likes of Mortgage Brain, 27 Tech, and Trigold. I've no idea, because we tend not to use them very often because they're not particularly accurate. So we've written our own. And we do see Quantum come up quite a bit, especially now with the pound like-for-like remortgages or pound-for-pound remortgages come up quite often. Now, Spencer set himself another question. Have you seen landlords' property portfolios change? A bit of an unfair question to you, because you've not been there very long, and you weren't.
Yes. Paul would definitely be able to answer this one. I'm really sorry. I mean, there's a lot of different sort of complex ones coming in, and what about this and what, different things. But there's still a lot going on. There's still a lot of portfolios going on. There's still a lot of business going on, I guess. Landlords are still sort of definitely doing a lot of portfolios and different things. So lots there.
From what we've seen, it's I mean, a lot of people are now coming off fixed rates, and they're seeing some. And we had one lady who had a very nice rate back in 2018, and she had 9 properties on one loan, and the payment was about £5,000, capital repayment £5,000, and it's now up to 9.5.
Yeah.
Rental income from those properties is 9,700. She didn't take my advice 6 years ago and incorporate, which she could have done quite easily, and not sort of like be breaking the rules because it was a portfolio that was left to her by her husband. But her accountant said, no, you don't want to do that. And she should now be suing him because she's costing him an absolute fortune. But that's the big one. We're seeing that. We're also seeing a lot of people where, I mean, and example, people with portfolios in their own name who've been having it away for many years with very low interest rates. And all of a sudden it's like, oh, there's no point me having these properties anymore because I'm not making any profit.
Yeah.
There's a lot of that. And trying to explain to somebody why the rental coverage calculation at some lenders is 165% because they're additional rate taxpayer and the property's in their own name is like speaking to a brick wall because they just don't understand it. And they've never had the advice from their tax advisor to tell them why they should have changed it all those years ago. Harry has just said, I'll let you answer, because I know you're going to answer this with a yes. Is the arrangement fee on the limited edition products really 5.25%? You're going to say yes. Paul will probably say yes. And hi, Paul. You've just.
Hello, can you hear me now?
Yeah, I can hear. Sorry, I can hear you now. So sorry about that. I've just seen you on the screen. Harry, it is. If we want cheap rates, lenders have to make a profit. If we want the rates where clients fit, then they have to either have to charge higher interest rates or they charge a higher fee. We've got one lender at the moment who's charging a 9.99% completion fee with a low rate. And it's proving quite popular, believe it or not, because people do have to, in some circumstances, they have to have that. This is the only way the deal's going to fit to do what they need to do, be that a remortgage, be that whatever it is. So it is, yeah, that's going to be here for a while, I believe, the high fees. Paul, any comments on that?
Yeah, I mean, again, we have tried to compensate with that because we do have a slightly higher rate with a 2.25% fee. So again, if it does fit, and obviously the borrowing, but again, the key part is the ICR, isn't it? So hence why we've got the sort of the lower rate and the higher fee, just obviously, like you said, to cover all obviously costs from the borrowing.
Yep. It's unfortunate all those changes made by George Osborne all the way back in 2016, whenever it was, that also like hit us, knocked us a little bit sideways, and we're thinking, well, that's not particularly good. Really are sort of like causing problems now because it is. We're seeing clients with, when you see a client who's got 10 properties, only one of them is mortgaged, and it doesn't fit on the ICR for what he needs, and then has to mortgage too. You think there's something wrong here. I mean, there really is something wrong. So I think the rules have to be readdressed. I really do, because what was brought out all those years ago was tried to sort of dampen down the buy-to-let market a little bit. It's annihilated it now, pretty much, for a lot of people, and there's people leaving. So those that never incorporated are now thinking, why bother? You know, what's the point in having all these properties and all the grief, all the aggravation, all the legislation that's been brought out, all the things we have to do each year, the fees we have to pay the council every 5 years, everything else we have to do. And this lady I mentioned who didn't incorporate, and her portfolio is earning her 280 grand a year. Her profit after everything each year is 23,000.
Yeah.
It's not worth it. It really isn't worth it. So she might as well sell the bloody lot, make her 5 million quid, pay her capital gains tax, and do whatever she needs to do. Why have the aggravation? Because it's probably only going to get worse. So there are no more questions on that. I'm going to ask one more question, then we'll go on to our next speaker. So Paul, I'll ask you this one because it wouldn't be fair to ask Claire this. How has the market changed in the past 12 months?
Yeah, I think as I said, I couldn't speak before, so there was a little section, and we launched to say about well, I've been since the start, so about 18 months ago, and where the lens where I was with before, so where we differ in the market now, it's all about the specialist properties we're finding. So quirky properties, as Claire touched on, high yielding. So again, we're seeing more and more smaller MUBs, multi-unit MUBs there. You know, so I've just done one yesterday, 6 units of 15 square meter per unit. So again, flats above shops, again, where again you're getting more better return. So we're starting to see like people are broadening their portfolios. So guys now, rather than everyone was buying these sort of, you know, 2 up, 2 downs or 3-bed semis, they're now buying, say, expanding into the HMOs, again, semi-commercial. And these are all the things that the market that we're in. Again, on the tenancy types, where we'll do any tenancy, vulnerable tenants, assisted living, guaranteed rent. We're seeing more and more of that because it gives the landlord that peace of mind, you know, for the guaranteed rent for sort of 3 years, along with the Serco and stuff like that. Yeah, so really, from ourselves, we've just seemed to be growing from month in, month out sort of thing. And said we are expanding. So we've got a development arm, and again, we're now looking to expand into bridging early next year. So it's and we've got our paper in with the FCA to do regulated stuff. So again, we have that middle of next year, all being well, depending on the FCA, obviously.
Middle of next year might be a little bit optimistic, I think. If the FCA
Well, I don't know. Well, yeah, we're hopeful. We don't know. So just which way the wind blows.
yeah, quite. Right.
But yeah, no. So then again, we've got huge appetite to lend, and as I say, it's all the things that Claire touched on. It's kind of a lot of the stuff we try to negate from is the famous last word, subject to value as comments. So we try to avoid that and say yes, we will do it. 65% above anything food or alcohol, and 70% anything else. So to be quite clear that that hopefully at the end of the day, it's not always about the rate. I always say because 5.5 of nothing, rather than 649 of something that completes is obviously again better for your client and you as a broker. So we're just seem to be every month in, month out on a growth. So can't complain so far.
And great lender and great staff as well, I've got to say, including one of my former staff who was brilliant, but didn't like travelling for 3 hours every day to get to my office. So Kate is sorely missed, but I know she's doing a great job at Quantum. So
she is indeed.
Right. Thank you, Claire. Absolutely brilliant for your first one. Superb. We'll see you again. Paul, nice to see you again. And speak to you both soon. Simon will remove you from the room. Please don't try and come out yourself because you could close down the whole show. And we will just move on to our next speaker. We're a little bit behind time, but that's my fault, not Claire's. So I will put on the next one. There we go. Right. So, and our next speaker, and hopefully he's in the room and will be coming soon, because otherwise I have to speak very, very slowly. We have James Green. First time Dudley Building Society have presented at one of our shows. And we have James Green presenting today. And I can't see that he's in the room. So I'm just going to check to see where he is. Is he appearing yet? Nope, he's not. Yes, he is. He's just appeared. So I'll continue talking in that case. Okay, James, can you hear us?
I can, yes. Thank you.
Marvellous. Okay, we can hear you loud and clear. Excellent. Right, okay. So a little bit of an introduction first of all. But first of all, there you go, James Green. I'm just now using the down arrow on my... No, that's not working. So I'm going to use use my mouse again. So we've been sent this today. This is the mortgage product changes that came out on the 11th of October for the Dudley product range. And today James is going to be concentrating, I think, a little bit more on the regulated side of things, so regulated mortgages, but also touching on holiday lets and other bits and pieces. A little bit about James, first of all. Having worked in financial services since 2006, James became Business Development Manager for Dudley Building Society at the beginning of 2021. He has a passion for driving improvements to Dudley's lending policy, service and risk approach based on market feedback, and has really enjoyed seeing Dudley evolve with agility in a rapidly changing environment. When he's lucky enough, James is able to mix work with pleasure and get in the odd round of golf, although bragging rights are currently with his manager after the most recent round, so the less said about that, the better. I don't mention golf anymore because I was officially the world's worst golfer, probably the world's worst cricketer as well, judging by what I've already said today. Claim to fame. James, Steve Ball, Wolverhampton Bully, I think he was called, Wolverhampton Wanderers legend, once attended James's under-13 school cup final football match. They met before kickoff and James had a photograph in the paper with him. Unfortunately, Steve left after 10 minutes, so James's dream of scoring a goal in front of his hero will crush. Did you score, though? This is what we want to know.
No, I didn't. I hit the post.
You hit the post. Did you win?
We did win. Yeah. Good.
Okay. Well, at least there's one bonus for that story, but you didn't score, so there's no glory rights for you. Okay. Right. Why you should watch this presentation? It's really why you should watch it. This will help you to help more expats lending into and in retirement, holiday lets, and once again, Specialist Hub is an approved packager for Dudley Building Society, and you can earn up to 0.4% of the advance on the day of completion, and not wait weeks like you would do with Simply Biz and all the others. And of course, you've got our helping hand and our knowledge of how they work and our contacts within the hierarchy. So it's a win-win for everybody. James, it's now over to you. I will see you in about 20 minutes.
Smashing. Thanks, Tony. Thanks for having me. Right. So I'll talk you through what we are famous for. So it'll be, we're a specialist lender in the heart of the Black Country in the West Midlands. Those who hear Dudley for the first time, they often try a Dudley accent. I'm sure, obviously I can't hear any of you, but I'm sure at least one of you has had a go at that in the past, or one of you would probably have a go at it now I've mentioned it. But we have a manual underwriting approach, and really what the most important thing for us is that we view things on a common sense basis. There are obviously certain cases which don't necessarily fit the perfect mold, and that's the sort of customer that is really a Dudley customer. There might be something quirky about their income or something about their age, and those are the sorts of areas that we sort of find ourselves doing a lot in. I mean, what's important with us is that we have a lot of sort of personal support, in that we've got a team of underwriters and a team who sit behind the business development team, who are available at all times. You'll find underwriters will make a call off the back of your case. They'll talk through sort of various areas of it with you, any concerns that they might have, to hash them out, as opposed to playing a bit of email tennis and going backwards and forwards, really. So something that seems like a Dudley customer to you, if everything isn't quite perfect, there is a way that we can take a view on that for you. So the main areas that we are known for lending in are these four here. So complex incomes, which is going to include your foreign currencies. It's going to include your applicants who are living abroad. They could be contractors, they could be self-employed, whether that's under the guise of limited company or sole trader. We've got new homes, which we've got no real qualms with new build properties, as long as the warranty that is there is one from our listed group of bunch of providers. But you'd be relatively hard pressed to find one where a warranty isn't accepted. And we'll do new build houses up to 90% and new build flats up to 80%. And then obviously on the new home side, as you're seeing here, is self-build. A big chunk of what we are seeing come through the doors as new business at the moment is your self-build stuff, which I'll touch on a little bit more and why that's so popular as I get to sort of the next couple of slides. So I'll leave that where it is. Buy-to-let and holiday-let. So with us, buy-to-lets, they need to be in the applicant's personal name, and we don't lend to portfolio landlords, but we will assist with first-time buyers or first-time landlords. They might not be owner-occupiers either. Had a case yesterday where somebody had moved out of their home, which they were going to start letting out, and they were moving in with their son, I think it was. Basically, they were sort of moving to the area so they could be near the grandkids, and it's obviously a perfectly feasible reason why somebody would not be an owner occupier in a situation where they have a buy-to-let or a holiday-let property. And then finally on here, we've got lending in and into retirement. So historically, if you've heard of Dudley in the past, sort of 3 years ago, what you would have largely seen Dudley being famous for was those older borrowers. And it's propped up by the fact that we do not have a maximum age. So no maximum age, it pretty much does what it says on the tin. All I would say for somebody who is an older borrower is, first of all, we need to look at the income. Now, I do have a case study in particular, which shows use of income beyond state retirement age or beyond the age of 75, which is where we cap non-manual earning as standard. But I'll leave that there for the case study, and I'll crack on to the next page. So as I've touched on, no maximum age there, but we'll allow 4 applicants. There's no minimum, so there's no maximum number of income streams that we can accept per applicant. So each applicant may have 2 or 3 income streams. That might be a combination of earned income or pension income, including things like foster allowance, carers allowance, DLA, PIP, working tax, child tax credits. As I say, there isn't a limit on the number of incomes that we can accept. So as long as it's a qualifying income, each applicant could have 3 or 4 incomes. We're seeing a lot at the moment, we have done, I'd say, really consistently over the last 18 months, but it feels like it's ramping up a little bit more at the moment, is JBSP. Now, with JBSP, we do prefer this to be a family member, but we don't say that family member has to be, it doesn't have to be your parents or your grandparents. It could be an uncle, it could be a sibling, and it could be the reverse JBSP situation where you've got a younger person coming on to assist with the affordability of an older borrower. But there's no loan to value caps or additional loan to value caps which are associated with JBSP. It's available on all product areas, and that does include on buy-to-lets and holiday-lets. On the gifted deposits front, we are more flexible when it comes to who the person is that is gifting that deposit. So as I said, on the JBSP, we like it to be a family member, but there are perfectly feasible scenarios why a non-family member might be gifting a deposit to our client, your client. And the one that we have seen most recently is for a chap who was from Barnsley. He had he'd secured a new role down in Hertfordshire. And obviously property prices are much different down there than they are in Barnsley. He had a family as well. And obviously taking this new role, which is such a long way away, they were relocating. And the firm said to him, well, Mr. Bloggs, really appreciate that you're moving down here. Understand this that moving down here is more expensive for you. To make the deal sweeter, we'll give you X amount towards the deposit. And obviously that is a non-family member. It's not even a person, it is an entity. But as I say, it makes perfect sense why a non-family member would be gifting the deposit in that situation. So it's something that we didn't really have to take a view on, even, to be honest. It's something that we're more than happy to accept. So as long as that rationale is there, and I would always suggest anything like this where you need to provide a bit of rationale, just upload a note at dip stage and the underwriter will understand. And as I say, the underwriter is going to make phone calls. So if there are any further questions off the back of that, then they can give you a call to ask. So construction flexibility. Now, I mentioned about the fact that self-build is a driver of sort of a chunk of the new business that is coming through the door at the moment. And the reason that self-build is relatively popular with us is largely because of our flexibility on construction types. So the easy way to remember the constructions that we will accept are that we will look at an ex-local authority flat, all the way of anything in between, up to something which may have a sedum roof. It could be steel framed. There might not be masonry walls. It could be completely glass walled. Really, anything that you've seen, pretty much anything you've seen on Grand Designs, that as long as it's not fully timber, that you think, oh, that's pretty interesting, is most likely going to be a property which Dudley will accept. And as I say, that's one of the drivers as to why that area of business is quite strong for us at the moment. Expats. Expats is probably the reason that the biggest chunk of our business comes in at the moment. And the main reason for expat popularity with us is that we will accept somebody that lives in pretty much any country and earns in pretty much any currency. The easy rule normally for a country that we will not accept is somewhere that you may not feel safe living yourself today. And you only have to turn on the news to know what those places are. However, with that in mind, there are certain places that an applicant may be residing that are the sort of places that you might not necessarily think that you're going to spend your summers in or move abroad to for work. But there are industries that exist purely because of the fact that there are countries that are less safe, in inverted commas, than others. So we've got an applicant on the book who is an ex-armed forces person. He now is living in Iraq for work. He's not in the armed forces anymore, but he works for a security company. And obviously, as I say, his industry exists so that his industry exists because of the fact that there are different political and safety situations in the world, and the reason for him being in Iraq is totally feasible. So the long and short of what I'm trying to say is, if you hear a country and an alarm bell rings, don't necessarily think that it's a closed door. There is still a high chance, really, that we'll take that common sense view. We'll look at the customer's profile and what their sort of situation is, and quite likely be able to assist there. Self-employment. With self-employment, we, as standard, we will take an average of the last 3 years self-employed income. There's been a rise of more than 25% in that income or in the profits. Obviously, there are various factors such as COVID, and then other reasons which are personal reasons, life reasons that people find themselves in, which mean that the level of income has fluctuated throughout the years, and they want to use the latest year's accounts. That's absolutely no problem at all. Again, this would be a case where I would upload a note that just explains basically we're working from the latest year's accounts for our affordability purposes, but it does exactly what it says. Basically, we will accept the latest year's accounts if required, and all we're really going to ask for in that sort of situation to get ourselves comfortable is a reference from the accountant to say, yes, the level of income that you're seeing today is sustainable, and this is why. We quite likely will ask for a projection of the current year as well to ensure that we've covered all bases, really, to make sure that the earning is going to be sustainable for the term, because obviously that's the most important factor for us. You can capital raise on the whole product range again. With capital raising, as long as it's not a speculative reason, then there are many different many different capital raising reasons that we'll accept. We've obviously got your bog standard home improvements, and then moving up the scale, we've got your debt consolidation, your tax bills. They might be capital raising for an onwards purchase, whether that be resi or buy-to-let. And actually, most recently, I think it was a couple of weeks ago now, saw an applicant who was capital raising to purchase a property in Cyprus, and that they were an expat, of course, and that property in Cyprus was where they were going to be living. Basically, they didn't want to be paying rent. They had the ability to purchase somewhere to live in that they could call their own, and absolutely no problem doing that. We just obviously need the information that shows what that property is, basically, so the underwriter can make an informed choice. And then finally, on capital raising, we'll accept capital raising for business purposes. As I said, with the capital raising, it can't be a speculative reason, so it would need to be investment in an existing firm, which we can see there is a track record of, and the underwriter needs to be able to understand that the funds that we are raising are going to add value to this business and ensure that the applicant's income is going to remain the same, if not improve because of it. Buy-to-let and hold-to-let. Well, the maximum loan to value on buy-to-lets and hold-to-lets, whether it be interest only or capital repayment, is 80%. Now, that is the same for consumer buy-to-lets and as well. So there isn't a buy-to-let or holiday-let loan-to-value cap anywhere, except for sort of on product, which obviously varies depending on price. But with the calculations of them both, we will, as standard on the buy-to-lets, as you'd expect, will work from the AST for the affordability. And if that doesn't meet, then we will revert to a full affordability assessment. So it's not top slicing, but in effect, we are treating it as a second residential property. And if they can afford both of them in their own right, then by all means, that's something that we'll do. With holiday lets, I'd say we're seeing more holiday let business as it stands than we are buy-to-lets. And that's purely because of the fact that we take a true average of the high, middle and low seasons income. And that number is put in as the expected rental monthly income in our buy-to-let calculator. And obviously, these figures are much more inflated than they would be on a general buy-to-let property. and they usually pass with flying colours because of that. If it doesn't meet, though, it still will revert to that full affordability assessment in that it is looked at as a second resi. So there's the flexibility can be applied on there as well, but we see it being used relatively little, to be perfectly honest, on those. You've probably read ahead and you've seen what our maximum loans are. 2.5 is the highest that will go, but still at 2.5, you can see it's quite a high loan to value limit that we will accept. The 90% of the £1 million is something that we've been doing for quite some time now. And in fact, we've been doing it for the entirety of me being at Dudley Building Society, which has been just shy of 5 years. So we're very used to seeing larger loans with relatively high loan to values. So we've got a fair bit of comfort with those, really. And it's the underwriting decision, the confidence from the underwriter because of that isn't really related too much to loan amount. Interest only, as I mentioned, it's 80% on the buy-to-lets and the holiday-lets, but on the resis, it's 75%. With interest only, we don't have additional loan-to-value caps based on what the repayment vehicle is, but generally speaking, on the resi side in particular, it is sale of property and downsizing that we are seeing there. So we'll still do the full 75% on those. The rule as standard is that we'll do a search in a 3-mile radius to make sure they can downsize feasibly in the local area. However, similar to the chap who I mentioned with the gifted deposit in that he was relocating, we can look at that similarly on interest only. So we see cases from time to time where they might be living in London, Greater London, areas where property prices are quite high, or areas where they are purely there because of their career. And they say, well, at the end of the term, the term is going up until my intended retirement age. And at the end of the term, I'm going to move back to Wolverhampton, which is where the grandkids are, it's where my nieces and nephews are. And obviously, if we know that, we can do our search for a feasible property to downsize to in that area. And what they are able to achieve there is obviously a lot different than what it is in your Londons of the world. So a lot of common sense can be applied on the downsizing situation. And then finally, on this page, maximum LTI is 4.5 times traditional borrowing. However, if it is a pound for pound remo or a non-rate case, then there is no loan to value limit. LTI limit. Loan to value limit would be a bit generous. There is no LTI limit on these. So exactly as it says, if their income multiple is above 6 times, for example, then we can do that happily. I did an example for somebody recently where it was an applicant who, and as I say, I completely made this up, but it was based on a single person who was 50, who was earning 50k per annum. We were just using the ONS figures for the expenditure, but they were able on a pound for pound remo to achieve 6.8 times income multiple. So it's very flexible. We are used to seeing those types of cases. So if you've got something which is higher LTI on a pound for pound in particular, then we'll most likely be able to help. With the self-build stuff, I think I'll keep this slide relatively brief because it's one of those things that's usually you're really interested in it or you're not interested at all. But the easy takeaways from the self-build proposition with us is that we will allow both advanced and arrears stage releases. The general trend in the market is that this is an arrears-based product, and there aren't many lenders out there who have an advanced payments option. Obviously, product pricing is going to be cheaper for you on the arrears side because of the fact that that's lower risk for the lender. But we go up to a very high percentage of the gross development value, which is 85%. If they've spent all of their cash already in purchasing the land, for example, then we can release up to 50% of that land value up front so they can continue with their build, and then they can go on an arrears basis from that point onwards. So they still have the flexibility of arrears stage releases if needs be. And these stage releases, they're all nice and simple. They're all 85% of each of the value at each stage, where there'll be a re-inspection. I think, well, I know the fee is 85 quid, but we can come into this project at any of these stages. So as I say, they might have already purchased the land, or it might be a case where they've already got the property watertight, and they just need borrowing so that they can fully fix it out and make it a home that is habitable for them. There's a lot of flexibility there. And finally, another reason why we see a fair bit of self-build come our way is flexibility on the management of the build. So obviously you only have to watch something as Grand Designs, which I've already mentioned, where you see that, you know, costs, they can either spiral or they can be a lot higher than they were originally quoted. And that means that there are, through every turn of the project, the customer is going to be trying to save funds where they can. The area where we usually see funds being sort of saved is on the management of the build. So we say that for our risk satisfaction, we basically say that the build needs to be managed professionally until it's wind and watertight. But beyond that point, if the customer wants to finish it off themselves and manage the rest, they can do. So a couple of case studies. The first one is lending into retirement. And as I said on the original page where we had that diagram, and I said that multiple areas can be used in conjunction with each other, this is a perfect example of that. So we've got an older borrower, or an older couple, who are self-employed, and they need a 35-year term to borrow a relatively large loan amount on a property which is thatched. It's grade 2 listed. It has an annex on the side, and that annex, they weren't sure whether or not they were going to let it out or whether they were going to just use it so that family member, friends, whoever comes to visit can spend time in it. Either way, we are comfortable with both of those situations. But as I say, at this stage, they didn't actually know what they would like to do. But it's not a problem, because from the affordability standpoint, we're just working from income as opposed to expected rental income if they were letting out that annex on an Airbnb basis. But the important thing here, most important thing for it to work, was that we could use their self-employed income for the entirety of the mortgage term. Now, I mentioned that 75% is 75 is the oldest age that we will go to for non-manual income, and that does include drivers. But if they are self-employed and they're in a situation very similar to what Claire was saying, where they can sort of step away from the business and they can continue to draw an income without too much heavy-handed sort of day-to-day operation, we will use that income for the whole of the term. So here we use their self-employed income to the age of 87. This one is a very bog standard Dudley case. I think Tony might be coming on to kick me off because maybe I'm running ahead of schedule, so I'll speed up a little bit. But we've got an expat here who's living in Dubai, wants to let out his property that is in the UK, just somebody to keep it warm, earn him a bit of an income. But the important thing here was that we were able to take his income on face value as tax-free. So anybody who's living in a country where they're paying a lower level of tax, such as Hong Kong or somewhere like Dubai, where they're not paying any tax whatsoever, we will take it as it is, basically, and work the affordability from that. So in summary, things to think about with Dudley: our expats we'll look at somebody who lives in pretty much any country and earns in any currency. We'll also look at expats who are self-employed. With holiday lets, we will accept, we'll do an average of the high, middle and low seasons income for the affordability there. And one thing I didn't mention actually is that if they would like to spend time in that holiday let of their own, then they can do. We just expect they're not really going to exceed 2 months of the year in that property, but it's not something we police. We trust that they're going to be using it as expected. With the self-employment, we can use the latest year's accounts if needs be, and we'll also accept applicants who have a minimum of 1 year's accounts. With older borrowers, like that case study I showed you, we will accept the use of income to a ripe old age if they're going to be stepping away. On your buy-to-lets and your holiday lets, it's 80%, whether it's interest only or capital repayment. And then with the self-build, we've got a lot of flexibility on the construction types. That flexibility does filter its way into the rest of our sort of policy as well. And we'll also accept the client managing the build themselves, from it being wind and watertight if needs be. So I think I might have just run over. Apologies, Tony, but that's all of my slides done.
Just a little bit. Don't worry about it. We've got a couple of questions, mainly regarding self-builds, actually. So,
All right.
J. Debbie, I'll talk to you separately on this. I'll give you a call this afternoon regarding your question. Chelsea has asked, do you accept retrospective PCCs for a new build warranty?
I'm afraid not. We don't accept retrospective.
Okay. Mohammed has asked, do you lend first-time buyer, first-time landlord? We
do, yes. And I imagine that question might have been mentioned before I got to that slide. But yes, first-time buyer, first-time landlord, no problem at all. The reasons where we see that the most are culturally, where you've got family situations where they may be intergenerational households, and the sort of the younger person therefore doesn't have their name on a mortgage or own a property, and therefore, they've got some funds which they've saved up, and they want to get a bit of an income from it. So yeah, no problem at all.
Good question is, would you accept a knockdown and rebuild?
Absolutely. Chelsea. Yep. Knockdown rebuild is, well, we've always allowed it on the self build. It was at one stage it was very common for us to see. Not seeing so much of it now, but yes, absolutely fine.
Fine. We got we got about 45 seconds. So one question from yours that you put, is the LTV limited if sell and downsize is the repayment vehicle for interest only applications?
It's not, no. I think I probably answered my own question during the during the presentation, but 75% is the maximum for interest only in general, and sale and downsize, 75% is still the limit.
Perfect. Right, James, thank you so much. That was excellent. We will see you again, speak to you soon. Simon will remove you from the room, if that's the right
Thanks for having me.
But thanks again. Excellent. Right, everyone. So what we'll do is it's just coming up to 20 past. So we will return at, there we go, 11:30. We'll see you shortly. Quick comfort break, quick cup of coffee. Cheers. Okay, welcome back, everybody. I've had a good break. Okay. Oh, Stacey's there. Oh, that's quick. Stacey, can you hear us?
Yes, I can hear you fine. Can you hear me?
Perfect. Absolutely perfect. Loud and clear. Right. Okay, we'll crack on. Having to use a different part. Okay, so next speaker is Stacey Woods from Selina Finance. You should receive this via email earlier on today, which is basically their product guide, dated September. A little bit about Stacey, first of all. She's been in financial services for the last 12 years, initially working in the post room for Blemain Finance, now known as Together. Her career has seen her grow from here, joining Selina Finance in 2021 as a key account manager, where she was responsible for looking after brokers all over the country. Today, she is head of sales at the company. Her role at Selina is to grow and maintain strong relationships within her broker network, keeping them up to speed with their product range. And Stacey's claimed, oh no, there's a bit more. I've just remembered now, this was such a long bio that I had to put on 2 pages.
Okay.
Selina brings something new and exciting to the second charge market, which Stacey can't wait to tell you about. Beyond Stacey's career, her greatest joy is being a devoted mother to her 2 teenage daughters. Family has always been at the core of her life, having married her childhood sweetheart 5 years ago and spending the last 21 years creating a wonderful life together. Stacey is a massive supporter of Manchester City and loves spending her time following the team all over the world. Now, for those of you that think, Man City supporters, she's only started following them when they become successful, this is the one that disproves it. Her claim to fame: when Stacey was little, she met the full Manchester City team and had lunch with Francis Lee, Man City legend and manager at the time. And I'm old enough to remember Francis Lee playing and also fighting quite a lot as well, from what I remember. He did like a punch-up.
Yeah,
so
my dad used to throw me in there at the deep end. From being about 6, I was at Main Road. So I'm not one of these glory hunters. I often get asked that.
Excellent. Didn't think you were, but I thought I'd just point out, I'm sure some people were thinking, glory hunter. Yeah, just started, once they won their first trophy, they started getting, all the money came in.
I was in Division 1 when I supported them, so yeah.
Yeah. Okay. Why you must watch this now? This is something quite close to my heart actually, because it's the second charge market and something I've been heavily involved in. Stacey will be talking about the best product to hit the second charge market in 25 years. Quite simply, by a country mile. It's only been 3 times that I've actually been able to say that over the years that something has been a game changer, and this is the latest one, and is something that I was saying was needed for the market for many years, and lenders just ignored. And then Selina quite literally launched with the product that I've been talking about, not because I've been talking about it, but because they came out and realized that this could be a great product. And it is a great product. You can help more self-employed customers. Selina's end-to-end digital journey and the call specialist hub is an accredited packager for Selina Finance, and you can earn up to 4% of the advance. So over to you, Stacey. I will see you in 20 minutes.
Perfect. So just to set the record here, I have a very yappy Pomeranian dog, and sometimes things go wrong with these web calls, so I'll apologise in advance if the door goes or anything happens. So yeah, I've spent the last 3 years at Selina. We've got a bit of a quirky product, a bit quirkier than some of the other second charge lenders, so I'm going to talk to you a little bit about that. Product terms at a glance. Our starting rate is sorry, that would be nice. I remember, I think it was only 12 months ago, maybe 18 months ago, our starting rate was 3.95. I think the market's come a long way from that. But yeah, our starting rate is 8.45 currently. Maximum LTV, 85%. Instant valuations for all loan sizes. So we use desktop valuations, drive-by valuations, which I'll show you the actual matrix in a little while. Something recently that's changed, we used to lend up to $1 million. We've now just reduced that to 500k. Minimum loan size is 10k for Selina, and you can only secure on a residential. We don't do any buy-to-lets currently. Watch this space though. There is maybe opportunity for that in the future. So we do fixed and variable rates, 2 or 5 year fixed options. We have a status 1 product. So initially Selina launched and we was very, very clean, more high net worth clients, but we're now sort of dipping our toe into the water of a little bit more adverse. And with our status 1 product that recently launched, maximum term 30 years, fee structure there. And we do have plans with ERCs and without. So I think the first thing we'll cover off is what is a Selina second charge mortgage? So it is a flexible drawdown facility that is secured on your home or your second home, used for multiple purposes. I think the one that we see the most, I would say, is for the HELOC side of things, which we'll cover off. Hang on, sorry, I'm not happy with the order of this slide. Sorry, it's my fault. So the HELOC, how we're different. So you have a standard second charge, which is your homeowner loan on the right there, and you have your HELOC, which is on the left. So the HELOC is known as the home equity line of credit. Canada, America, they have them just like they have overdrafts in the UK, and they're very, very popular. So anyone with wealth or good equity in their homes, it's something that's very, very common. How it's different, so you've got your homeowner loan, it's just a one-off lump sum into your bank, start paying an interest on it straight away. With your HELOC, you've got the drawdown facility, which is a flexible 5-year period. Okay, typical loan purposes for your HELOC, you've got business purposes, school fees. You might have a multiple loan function, so you might need your kitchen and your bathroom done. Your son's getting married next year. Your daughter's about to be 18 and you're buying her a car. You don't need all the money day one. Perfect for the HELOC. You've got the standard stuff, your debt consolidation. Again, home improvements will still come under the homeowner loan. Previously, we had one product, which was the HELOC, and 2 ways to use it. Now we have 2 separate products completely. So we've got the homeowner loan and we've got the HELOC, which is the drawdown. You can have a term of 5 to 30 years, always a minimum of 5-year term on the HELOC. I'll explain why. And on the HELOC, your interest is only paid on the funds that you are drawing down. Okay. So how it works, you can see this example here. So this client has taken a facility for 75k on the home equity line of credit. And year 1, they take 40,000. Year 2, they take another 9,000. And as you can see, as the years are increasing, the borrowing is increasing a little bit more. as they get to their 5th and final year. So you are then locked into that 60,000. So you're not, you're not obliged to take the full 75. You can take it however much you want, above the 5K, above the 10K minimum loan size over the 5-year period, and you can draw down and pay back a little bit like an overdraft. So the important thing is to remember for your clients, they can actually pay it back a little bit and then draw it down again. So the flexible facility works throughout that 5-year period. So this is where it becomes amazing for like property developers. Like I say, lots of different use case scenarios. On that slide before, yeah. So lots of different use case scenarios. You're purchasing a second home, purchasing buy-to-lets. Again, with Selina, if you're purchasing a buy-to-let, we don't even need any evidence of it. You could just come to us and yeah. Okay. So we look after employed and self-employed customers. I think a big USP of ours is our self-employed. We do a lot of self-employed clients. With regard to your employed, you'd need to be minimum 6 months in your current role, not in a probation. We can actually look at clients now on a referral that are in a probation if they've got history of the same type of employment for at least 12 months. So if you're obviously you're in the window cleaning business, you're moving into banking, it's not going to work. But if you're in probation, you've just taken a pay rise, for example, and you're still in the same line of work, then that's absolutely fine. We'll take 100% of your basic salary. We can take overtime, bonus, and commission. We can use up to 100% of it. It does say 50% of income on here, but on a referral, providing the case is strong, good affordability surplus, not too much adverse, we can go up to 100% of bonus, overtime, and commission. The system will only allow you to put 50% in, so it is on a referral only basis. We can look at 0-hour contracts. Again, we would only use 50% of the income from that. Parental leave. So clients that are on maternity leave, we won't penalise anybody that is currently on maternity pay, which is another win for us. We do get a lot of business this way. If your client's about to go on maternity leave or is on maternity leave, there is no limit as to which we can use that full amount of her back to work salary, providing you can get a letter from her employer to state that she will be back on X date earning X salary. We can use the full salary. So affordability wise, we are quite flexible, and is the loan sustainable for her? Self-employed applicants. So we do limited companies, sole traders, and partnerships. All three of them, you can provide an accountant certificate. I will say that limited companies must be 2 years minimum of trading, sole trader 1 year. And we do allow tax calculations, SA302s with your sole trader. But limited company, it would simply only be your accountant certificate. Properties that require renovation. So I would say anything that we're maybe adjusting the bathroom, kitchen, would need to be mortgageable, i.e. not in the first fix stage. This is something that we're taking on a lot of at the moment. One thing I will say is if you send your submission photos ahead of your referral, it is something that we're doing a lot more. I think once the primary applicant is deemed as low risk with regards to income, things like that, we're looking at the case as a whole. As soon as we start messing with the kitchen and bathroom, we would always need a full risk valuation. And like I say, if it's not mortgageable currently, we would need the surveyor to add additional comments to state that once the kitchen and bathroom have gone in, i.e. then it will become mortgageable. So we are taking a view on those and having more of a common sense approach to the properties that are requiring renovations. I think the main thing for us is that we get those photos early on. Adverse criteria. So this is something that's changed more recently. So our status 0 product, on your secured arrears, we would allow no missed payments. Sorry, something popped up then. I think something was wrong with the internet signal. On other arrears, so this could be credit cards, things like that, utilities. So, sorry, we ignore communications, utilities, and mail order. So your other arrears is pretty much your unsecured credit, You can allow one missed payment in the last 12 months, and you need to be currently up to date on all of those. And then your status 1 product, which is something that's more recent to us. If you're bringing any missed payments up to date, any credit up to date at all, if you're bringing it up to date with the loan, then you will automatically qualify for a status 0. So that's where we're allowing a little bit more adverse now, but obviously it's rate for risk, I suppose. That's something that's happened quite recently. Valuation matrix. So any properties that are up to 500,000, we can use our home track criteria up to 85% LTV. So if you get a confidence level of 6 on your home track, we can go all the way up to 85% LTV on that for you. If you get a confidence level between 5 and 5.95, we can use up to 75% LTV. And we do allow drive-bys. Our valuation criteria does win us a lot of business as well. If you are properties over $1 million, again, we can go all the way up to 80% LTV with your home track. Also, if your home track, we say that you need a confidence level of 6. If your confidence level was 5.8 or 5.9, we do have a little bit of wiggle room on that. So what would happen was when you get your home track in, we would use the lower range. We would use the lower range of the figure on the home track. So we wouldn't insist you get a valuation. We would just use the lower range. So providing that fits on the lower range, we would use that. Failing that, you would need to get a RICS valuation. So referral points that are mapped on policy areas. So applicant history. So like I said before, we do now allow clients that are on probation, something that's very new to us. We allow less than 6 months mortgage history. We can now just have 1 month in the property, providing we've made the first month's mortgage payment. Again, that's on a referral. We accept 2 years address history. And we have a debt to income. So debt to income rules are 45 and loan to income 6 with income multiples of 6. Bonus overtime and commission, we've covered that one off. So applicants with fewer than 5 active credit accounts. So this was a bit of a quirky niche that Selina used to insist on. We used to insist that every client had 5 active credit accounts on the credit file. We've waived that now. It's 5 active credit accounts for joint applications. That's something that we've got rid of. So we've covered off the home track. So operational improvements. This is something that's massive internally. So we're trying to be a digital end-to-end lender completely. So with Selina, there's no application form. There is very little to do with submitting an application to us. We're trying, eventually the end goal is to have, you've got your standard cases, they're employed, you've got your pay, you don't need pay slips. They pass by a country mile, say on surplus. Both of them have been in the job an X amount of time and there's no adverse. These cases won't even need an underwriter eventually to sort them. The computer will just eventually automate it all. But for now, we've got ID verification, which is done by Verif. So as soon as the customer hits our underwriting team, the Verifs are sent out to the client, automated income checks and credit checks. We have a specialist underwriting team now, so you have full access to the underwriting team, or specialist hub do. We're trying to keep everything digital. We've just gone live recently with pre-consent funding, does what it says on the tin. So if, for example, your first charge is with the top 20, say, lenders in the first charge market, the likes of maybe the more quirky ones like your Bluestone, things like that, but maybe not. But if you're with Barclays, Santander, usually consent is just a formality. So to try and speed up the process, we're now funding with consent to follow on certain cases. So we also do no application form, pre-consent funding, and electronic mortgage deed. So everything is digital completely for our customers. There's no paperwork, nothing that needs signing. Like I say, I think in the last 6 weeks since it's all been live, I think we've had at least 4 or 5 same day underwrites to fundings. So yeah, time that is saving the clients is massive. just on the pre-consent funding and the DocuSign. Property risk team is now merged with underwriting, which is getting you used to check all the valuations manually, send them to the property risk team again, which would affect our SLAs. We're completely digital now, and the underwriting team check all of that. Any questions? Sorry, I know I went a little bit quick.
Sorry, Stacey, you took me by surprise on that last one. I was expecting you to talk for a little bit longer on the last slide, so I'm just about to click it, but it takes about 20 seconds for me to log back on. So thank you for that. Excellent. I will just, J. Debbie has said just regarding confidence levels, so just to explain the way that automated valuations work. So obviously it's an online system. So rather than somebody going out and visiting the property or driving past the property, you put the details in the property and it will come back with an estimated value, which is normally gathered from other sales in the area. So hopefully if there have been other sales in the area, it can come back with a decent figure. And also again, the confidence value is how confident the system is, even though it's digital, that value is accurate. So if you've got a row of 20 terraced houses, for example, the confidence level is normally going to be quite high, because if 2 or 3 of those have sold in the last year or so, it's likely that that property in question, the security property, is going to be the same value. With my situation, I live on a road of 9 houses. An AVM on my house would not have a particularly high confidence level, because mine's the only house that's actually got 2 stories. All the rest are bungalows and completely different and smaller. So it's mine would probably have a very low confidence level, whereas probably one of the bungalows will probably have a much higher confidence level because of other bungalows that have sold. So that's basically the way it works. It's probably not something that any of you really see, because it's something that we do in-house when we're arranging finance for somebody, because the valuation literally takes 2-3 minutes to complete, if that, probably quicker. So that's a low-level explanation of what an AVM is and confidence level. So, okay, and Jay's just said thanks. Okay, no questions from delegates. So what is this is a question you set yourself, Stacey. What is the typical turnaround time for a Selina customer?
Well, previously, I would say between 9 and 11 working days, but now 100% less than 2 days.
Okay. Are there any further affordability assessments on the HELOC if the clients draw down at a later date, such as 4 years into the facility?
No, we assess everything day one. The reason, it's fully FCA regulated. We would trust that the client can draw down at any point. So we do stringent affordability checks. The only thing we do is we would do a soft search after the 2-year mark if they was to draw more than a 50k balance. But providing that they've not had lots of adverse and missed payments, then no, there is nothing else done.
And why I said that right at the beginning, this is such a fantastic product. I mean, if you have clients, for example, who have children they want to put through private school. Now, I've been talking to one of our local private schools. We've got a school in Berkhamsted that's been going, I think it was 1543 it was established. I've been speaking to them, and so they said one of the biggest problems they have with obviously the parents of their pupils is that sometimes they're trying to pay up front, and sometimes cash flow just doesn't allow them to do so. So they've been allowing quite a few of their customers to go sort of like a little bit into the term before the fees are paid. But of course, what can possibly happen is that if it goes too far into the term, little Johnny's going to have to come out of the private school and go into mainstream school, which is never a good thing. Obviously upsetting for the kid. So this is a great product, because you can quite literally, if you've got a term like Berkhamsted School, the fees are paid before the start of every term. The drawdown can happen before the start of every term. And how long does it take to get a drawdown sorted, Stacey?
24 hours.
24 hours. So 24 hours, can I have the money? Yeah, there you go. 24 hours later, it's in your bank. It's literally as simple as that. And that's why it's such a great product. Great product. You've got somebody doing an extension. Why borrow? I mean, we got one in the other day, 250 grand for an extension, but why borrow all that up front?
Well, yeah, it makes sense. We actually have quite a few clients that are still on the 3.95 fixed HELOC, and they've not even drawn down all of the funds. It'd be good to be one of them right now with the way interest rates are in the market, wouldn't it?
Absolutely, you could borrow it and then lend it out to somebody else, couldn't you?
Exactly. Make a few quid.
Okay, that's all the questions we've got. No questions from the delegates. So, Stacey, thank you ever so much. It was good to hear that your dog didn't go absolutely mental like the last time when the guy turned up and he was attacking the door. So nice and quiet. So, but thanks again. we'll speak to you very soon. So thank you once again. Simon will remove you from the room. Don't touch anything, just in case. Don't close. Okay. You might close it all down. Okay, so we're on to our final speaker, or final lender speaker, which is, I'm hoping that she is in the room and is about to join. And the slides are moving over. The slides have now gone over. That's great. So I'll do a very slow introduction until she appears, just in case. No, there she is. Hi, Sam. How are you?
I'm good, thank you. How are you?
Yeah, very well indeed. Thanks. Very well. Absolutely freezing in this office, so I have to keep leaving when people are speaking just to try and warm up a bit. Stick my hands on the radiator because there's no heating in here. Okay, so we have Samantha Dance. Is it Dance or Dan? It'll be Dance, won't it? So Samantha Dance from Glenhawk, who recently got married. So congratulations, Sam, on that. Was it a good day?
It was great. Yeah, thank you. It was lovely.
Wonderful. Okay, so you should receive this on email this morning, their bridging product guide, and contains rates and basically everything they do. A little bit about Sam. Samantha brings with her over a decade of experience in the financial services industry, including her time at Together Money. Everyone seems to work at Together Money at one stage, isn't they? Where she was a regional development director for just under 3 years. Prior to this, Samantha spent over 10 years at Barclays Bank, where she worked across a number of roles, most notably as a premier relationship manager, where she looked after nearly 700 high net worth clients. Samantha is a social butterfly and loves nothing more than meeting new people, as well as spending time with her existing connections across the professional sector. She gets a real thrill from seeing clients achieve their dreams using property finance, whether it be buying their first or 100th investment property, new or rundown commercial premises, or raising money to further their business. When not working, Samantha can be found enjoying a country pub lunch or a windy beach walk with her family, including 2 hyperactive French bulldogs, and I presume you've added one recently, because I looked at your last presentation, you only had one at the time, so
yeah.
Thankfully I updated it. Her claim to fame, I actually added to this, Sam, because from the last one, because you only mentioned about bargain hunt in 2019. I did search last night again on Google, and I have actually found all the episodes from 2019. So for next time you present, there might be a nice picture of you. But she has also been at the television another time, once as a baby in a Daz advert, which I can't track down. So,
no, thank God.
But bargain hunt, we're going to find you. Trust me, we are. Okay, why you must watch this particular presentation? Quite simply, refurb bridging up to 75% of the loan to gross development value, and I put LTGDV in there afterwards, but also explained it. I did recently have a broker partner who didn't understand what LTGDV was and thought it was something to do with someone's sexuality. Obviously, it's not. They're one of the few bridging lenders to offer regulated bridging loans, and they're becoming fewer and fewer. Unfortunately, we're not seeing any new entrants into it, but we're seeing lenders actually withdrawing from it, so and we need as many as possible. Title insurance for quicker completions, and specialist hub is an approved packager for Glenhawk, earn up to 1% of the advance on the day of completion. Sam, it's over to you. I'll see you in 20 minutes. I'm going to go and stick my hands back on the radiator again.
Wonderful, thank you very much. And as you've just seen there from Tony, yeah, I do have to give you a little bit of a warning, just like Stacey did with my 2 dogs. One of them is very noisy and sometimes likes to join in when I'm talking. So if you hear a pig noise in the background, that is just one of my dogs. So what I'd like to do today is just spend sort of the next 20 minutes just giving you a bit of an overview about Glenhawk and what we do. But more importantly, I want to talk particularly about bridging itself, kind of across the board, how we can embrace bridging, explore opportunities, and hopefully help to diversify your businesses. So I promise not to criteria dump on you today, but hopefully by the end of this, you'll have kind of a good overview of what we do here. As always, any inquiries obviously come through to Tony and the team. They know really well what works for Glenhawk, and anything that possibly doesn't, I'm sure they could place with one of their many other lenders. So what I do originally is is kind of a bit of debunking the myth of bridging. So this could be kind of things that maybe you've heard previously, or other brokers have heard, or even your clients feel about bridging itself. So initially, obviously, you'll see bridging only has one use. As we go through this, you'll see there are plenty more, but it's multifaceted and can cover kind of many different areas, which we'll go through. Bridging is most expensive. Is finance is too expensive. This is probably what we hear the most of somebody that hasn't dealt with bridging previously feels that the cost is going to be too high. And I think the key thing for that is, first of all, I mean, bridging's never been closer to buy-to-let as it is now. But also it's how that cost is looked at. So if it's looked at as more of a business cost, then it doesn't tend to seem so expensive. So it could be if you've got a project that can only be worked with a bridging loan, and you're going to make X amount of funds at the end, which we'll talk about baked in profits and things like that as we go through. But it could be that that business cost actually ends up still then making you X amount of money. So it could be a choice between doing the deal or not doing the deal. Bridging is all about speed. So most of the time, yes, you do want a bridging loan to be fast. I mean, I always say that bridging in itself is a USP because it's fast and it's flexible, but not necessarily. So you could have something like I think some of the other kind of speakers have mentioned previously, that if you've got a property that doesn't have a kitchen or doesn't have a bathroom, then it's maybe going to have a nil value or it just can't be mortgaged. So it's not necessarily always a speed element. Lastly, bridging is last resort. Again, I think hopefully you'll see, I mean, we've certainly seen that the market is changing massively and it is becoming first choice for a lot of people rather than it being a last resort. And reasons being we'll kind of go through as we go through, cover as we go through. Sorry, put my teeth back in. Right, so you have heard me there use the B word a lot, and I know that bridging does have a bit of a dirty name, unfortunately, and I think that's just back to historically, unfortunately, it was written on kind of back of fag packet, not always ethical lenders in the market, so some people are quite scared when they hear the word bridging. So we've heard a lot of brokers kind of using different words for this. Short-term finance is a lot. One that we particularly like is transition finance. Now, you'll actually see opportunities for transitional finance all the time. So if any of you are kind of watching Homes Under the Hammer, hopefully you're not watching my bargain hunt. It's very cheesy. But if any of you are watching things like Homes Under the Hammer or Grand Designs, most of that will be used with bridging finance. But also as you walk down High Street. So if you was to see, a vacant commercial, just because it's vacant doesn't mean it's not necessarily an opportunity. And that's, again, something we'll kind of cover off as we go through. But even if you're walking down the street and you see scaffolding or you see skips outside properties, any of those could be a potential opportunity for transitional finance. So I actually had a meeting on Friday last week with a resi mortgage broker who wanted to kind of explore getting into bridging finance and being able to kind of diversify her business in that way. And one of the things she said to me was, well, I don't ever see bridging finance. It doesn't ever come across my desk. And I had noticed on the way in, actually, literally outside their window on the other side of the car park was 3 new build properties. So I kind of obviously brought that up in the conversation because that could be a perfect opportunity for a bridging finance. So they were almost complete from what I could see. Kind of the builders would literally just do in internals. And I asked if any of them had been sold, which they hadn't. And how long had they taken to build that? So they'd been building it for about 18 months. So that could be the perfect opportunity for a development exit. Maybe that developer has self-funded the works and now it's pretty much complete. He might want his money out to go onto the new project. He might have bills or debts on that he needs to pay back for materials, whichever it may be. Or it could be if they took development finance to do the properties themselves, that maybe they've come to the end of term with that. And we don't necessarily always need it to have been fully complete. So there's, bridging can come into play here if you've got a development finish and exit. So maybe you've still got a few bits left to do. You can't get any more funding out of your development funder, or you just run out of funds yourself. We all know how things have kind of overrun and costs have increased massively lately. And that has had a huge impact. So perfect opportunity. The other thing we kind of discussed was, okay, what did you see on your way into work this morning? What properties did you see that were for sale? Was there anything quirky? Was there anything unusual? And one of them had actually driven past a vacant care home that was up for sale with an auction house on their way in. So that could perfectly be 2 opportunities there. First of all, auction finance. So majority of obviously auction purchases need to be cash, or technically you can use your transitional short-term bridging finance to act as a cash buyer. Some people may want to take the risk to try and see if they can put that with a high street term lender on day one, but knowing you've got to put down 10% and complete in 28 days is a perfect opportunity for bridging finance. And also the fact that it's a vacant care home, we're seeing a huge number of increase in these of the smaller type vacant care homes being converted into flats. So again, who's going to buy that? What are they going to do with it? What are the plans? And it was really useful. Obviously, the lady kind of came out and said, right, I'm going to contact the auction house on the way home. And when you've gone, I'm going to go across the road and see if the builders there want a cup of tea and see if I can find the developer. So the opportunities are out there. It's a bit like that yellow car analogy where once you're looking for them, you kind of see them all the time. But otherwise, you wouldn't maybe necessarily notice they were there. So just to give you kind of an idea of this. So obviously, we are in a bit of a volatile market, but there are plenty of opportunities out there still to be had. This is a case study, recent case study of ours, where the client purchased a multi-unit freehold block. So they're buying 7 units within this block. They're buying this below market value. And this is something that we do a lot of and Glenhawk are really great at. And the reason why they're getting it below market value is because, one, they're buying 7 units, but also they're buying it as a block. Now, the client during this legal process was going to be creating separate leases for those flats. So they were going to be in place on completion, which meant we're then able to lend off the aggregate value, meaning in this scenario, the client was able to get up to 90% of purchase price. So they've only got to put down 10%. There's a baked in profit there straight away for the client. And I know that some of you may be asking, oh, but what about the surveyor? You know, how are you going to instruct that? So that's, again, something that's really key for us, and maybe why we do so many of these below market value type transactions is when we're instructing the surveyors, we don't give them the purchase price. We give them the valuation that's been provided to us. And that's because we want that surveyor to provide us with a true market value. Obviously, it's a difficult position for a surveyor to be in once they know maybe what a purchase price is. You are going to be hard pressed for them to kind of come above that. And valuations are so key, such a key part of any bridging, well, any mortgage really at all, to be honest, but also especially in bridging finance. So use of funds. So this kind of goes back to debunking the myth that we were looking at the beginning, where bridging only has one use. I mean, there are 11 on screen here, and there are many, many more aside from these. But just to point out kind of a couple of scenarios. So debt consolidation, there is a lot of debt in the market at the moment. And whether that's due to COVID or, like we say, delays in building works or cost increasing across the board, or cost increasing in materials, and you need to be able to consolidate those debts quickly, and you've got equity in your assets to be able to do so, then that could obviously, bridging can be a really quick short-term solution for that. It could be, like you say, settling a divorce, buying out business partners, refurbishment. I know we'll touch on that quite a bit more as we go through, so I won't spend too much time on that bit right now. So baked in profit margin. So as I've mentioned, obviously there that with the multi-unit freehold block, there are a lot of these opportunities out there. And you know, it's not all about just making profit at the back end, which is obviously great. But also if you can find that right deal and look at those, find those margins pre-completion or pre-exit of the loan, then you've got this baked in profit sitting there. And it could be examples like we've just gone through with creating leases on multi-unit freehold blocks, splitting titles. It could be things like tenancies and leases. If if you're extending the lease as part of the completion or once you bought it, have you got a baked in profit there? And that's where, again, this bridging then looks at being a business cost rather than it being too expensive. So another kind of example of this here. So we are unfortunately seeing, or maybe, well, unfortunate for some, fortunate for others, but seeing lots of landlords now deciding to exit the market. And whether that's to do with, the increase in costs, or maybe it's just that they're getting older now, don't want the hassle of it anymore. So we're seeing a lot of portfolios being offloaded. And again, that just creates a great opportunity for others out there, because if you're buying for, in this example, 7 terrace properties, and these are all HMOs, but you're buying 7 residential properties, you're typically going to be getting that a little bit below market value because you're buying all of them together. And then again, this is where it can come into play of us being able to then work off open market values rather than purchase prices to be able to get them the most out. Also, another kind of scenario it might be worth just mentioning for something like this is something, again, that we're happy to look at, is if somebody's buying, so a share purchase, buying an SPV with those assets held within that, we are quite happy to look at those. And that obviously then just opens up the opportunities for clients at the back end, whether they might be keeping a couple of them, selling a couple of them, whatever they're doing, but it gives them a lot more opportunities to look at high street lenders and such like. So refurbishment loans, this is so key at the moment, and I know that across bridging, refurbishment has always been a huge part, but in the UK we see property as such a tangible asset. It's something you can see, it's something you can touch, so it's always going to be a really popular, a huge part of the market, but especially refurbishment. And as you can see here, and the way that this has increased over time, that it's actually going to end up having such a huge space in the property property finance market is going to be under refurbishment. And we actually think this prediction of £4.6 billion by 2026, the way that things are going, will actually end up being even higher than that. But this is why we kind of focus so much on refurbishment during this presentation. And this is really, really key to, obviously, when you're looking at refurbishment loans, is the differences kind of between permitted development and planning. Now, if somebody was to ask me if I was buying a residential property and I was going to convert that to a HMO, whether I would rather to do that under permitted development or planning, I mean, it will be different for everybody. It depends on your business, depends on your business plan. But personally, I would go for permitted development. Reason being is you have so much more control over what's going, over what's going to happen, and also the time makes a huge difference. And then that also factors into the costs as well. So if I know that I'm going to be buying a residential asset, I'm going to convert it into a HMO, and I'm going to do that under permitted development, then within 56 days, I'm going to be able to start those works. And if I don't get a response in 56 days, I'm able to crack on anyway. So this means that I can budget pretty much what that obviously cost of refurbishment is going to be. Now, if it's something where I need planning, we know that the councils are obviously under huge pressure at the moment. And that could be, 5-6 months maybe down the line. And I think recent times have shown us who really knows what's going to happen to costings in that time. Now, you will obviously will have an idea, but it could have a massive impact, and then that could then affect on your profit. So I would personally prefer to go with permitted development if that option's there. But the other thing to kind of note as well is if you're in Article 4 areas, for example, when you're looking at HMOs, is you may then need to get planning. If that is the case, then transitional finance, bridging finance can still be a perfect option for you, because as long as you've got kind of a contingent exit, if you weren't able to get the planning, we can still help with a purchase on day one. So it's still something that is definitely worth considering. But if you've got the options, there are a lot of benefits there for be looking at permitted development. Now, the government have helped us with this massively. We probably all know that, unfortunately, we haven't ever been able to hit our quota for new residential assets that we need in the UK, just for housing as it is. So a couple of years ago, they brought in this change to Class E. And then it meant that any of these use classes here for commercial were amalgamated into one use class, Class E. So you could go in between the two without the need for planning. But what that also did was opened up options for us to be able to then look at converting to residential under PD, under a use class of MA. And this then meant that, so where I was saying, if you've got these vacant commercial properties, if you're walking down your high street, a lot of those now, depending on, obviously, as long as they fit with the right criteria, and you should always get the right client, should always get the right advice on that. But if they've been vacant for 3 months, there is potential there to be converting that asset into a residential asset. And then obviously you've got your baked in profits there, which again, I'll kind of go over it a little bit later. So this is just a perfect example of a case study of something like this. So this is a semi-commercial asset. This was a bank. And I'm sure that all of you are seeing in your high streets that there are, unfortunately, a lot of banks closing. But this just creates perfect opportunity. So as Tony mentioned at the beginning, I worked in banks for many years. And most of them you'll find will have huge spaces above them, which by the time I left were just really not used at all. So they're perfect opportunity for an investor to come in. Now, this one, the bank was converted into a bar, and then the upstairs into 2 residential assets. And this was all done under permitted development. We were able to lend 240 grand, which was 100% of the works costs, as well as the funding for day one. Now, on this scenario, we went up to 70% loan to GDV, but we can actually go to 75. So as I mentioned at the beginning, talk to Tony and the team. And we're always happy to have a look at these types of scenarios. And then for the exit for this one, it actually works best for the client to split the two as well. So he split the titles between the commercial and the residentials and then exited them separately, one on obviously resi mortgage, one on commercial mortgage. So even those types of opportunities, bridging finance would just fits perfectly, and obviously in particular refurbishment here as well. So as I've kind of mentioned about your baked in profits there when you're looking at commercial. So if a surveyor is to value a commercial asset or to value a residential asset, they're going to be looked at completely differently if they're vacant. So if you've got a buy-to-let property, for example, whether that's got a tenant in it or it hasn't got a tenant in it, is pretty much going to value up the same. There's not going to be a big difference at all. However, when you're looking at a commercial asset, if they're valuing a vacant commercial property or a tenanted or leased commercial property, there's going to be a huge difference between the vacant possession and the open market, and the trade-in values. And that's why if you're looking at a commercial asset, which you can then convert into a residential, you've potentially got an average of a 30% baked in profit just for converting from commercial to residential. So I'm hoping that I've given you kind of a bit of an overview as to potential opportunities that are out there for investors for unregulated bridging. But as Tony mentioned again at the beginning, we do also offer regulated bridging here at Glenhawk. So if you've got, for example, clients found their dream home and they go into the estate agents and the estate agent says to them, well, have you sold your property? Well, their property's not even on the market yet, but they really don't want to lose out on this dream home. Bridging could be a perfect scenario, a perfect solution for that kind of scenario. And they can then potentially look at first charge on the property they're buying, and then a second charge also on their current residence. If it's got a mortgage already, if it's unencumbered, then obviously you can lend across the two, however that may work. And then also on the exit, when they've sold 12 or hopefully less than 12 months down the line, their sale of their main residence, they may still need a small mortgage at the end of it. Absolutely fine. But it just means that the client doesn't miss out on this dream home. And that's just one example of how regulated bridging can be used. And it's probably the most common we see in the chain break scenarios. And I actually learned the other day that one of the most searched for bridging on Google is regulated. I think this market is a lot bigger than people maybe realise or anticipate. So just to go through some of obviously the short-term advantages. So we've touched on obviously auction purchases, why you would look to use transitional bridging finance in this scenario, below market value purchases, but we've talked a lot about refurbs. Now, we don't have a kind of strict criteria of, you have to have completed 3 projects or whatever it may be to be able to do a refurb bridge with Glenhawk. However, we do like you to have some sort of experience. And if you don't, then this is when the potential for possibly a JV partner can come in. So we see a lot of these where they're teaming up with somebody that does have the right experience or has done these projects before, or they're going to project manage them for them, or maybe they even want to sit as a second charge behind us throughout the term as well. All of these things can be obviously really great examples for where you can use your short-term advantage there for bridging. So, as I've said, obviously we do bridging, and it's across all of these areas: refurbishment, regulated, residential, commercial, and second charges. And we've actually been awarded that we are the best at it for the last 3 years running. So hopefully that's why Tony's had us on this call to support us with this. But yeah, that's all from me. So thank you very much for listening.
Sam, thank you very much. Excellent, absolutely excellent. No questions at all, which means you must have covered everything.
Must have.
So here's the ones you've actually set yourself. Forgive me if any of these you've actually answered. I had to pop to Lou, so I might have missed something. But what is a key to consider when a client is entering into a bridging loan?
Yeah, so certainly key would be exit. It's definitely always something to, whenever you're looking at any bridging loan, is how that client is going to exit. Obviously, the lender doesn't want to get stuck with a client on a bridging loan, but more importantly, the client doesn't want to be stuck on a bridging loan. Now, we are happy to look at rebridges and things as well, because these unfortunate scenarios do happen sometimes, but that's something that's definitely key. Then the second thing I'd probably say is having a look at how that property is going to be valued. So again, I've touched on working on open market values and things like that, but there are lenders out there who will work on 180 days or 90 days. So that's always something to consider when you're placing a deal.
Okay, and that probably covers your next one, which is what should you consider when selecting a bridging lender?
Yeah, so the only other thing I would probably kind of say aside from that, which is really key, especially with the market the way it is in the moment, is checking how a lender is funded. So whether if you've got somebody that's kind of forward funded and you know that 2 days before completion, they're going to have to send that deal up to a funder and check they're okay with it, and you've got the possibility of that falling apart at that point, or then running out of funds beforehand, things like that, that's always something to check. So at Glenhawk, we're institutionally funded. We've got funding lines from JP Morgan and NatWest, but all of our underwriting and lender decisions are in-house. So we have the final say on what we are and what we aren't lending on. It doesn't have to go off to anybody else for permission.
Absolutely vital. I've really got to say that who you're dealing with is, I mean, there's hundreds of bridging lenders out there, let's face it. And I get probably 2-3 a day contacting me saying, use us, we're fantastic.
Yeah.
And they're not. But actually finding out who's behind it, who the funders are, and also Google them, see if they got any reviews. I've come across a situation. I recently, we had an application for a lady of 80 years of age looking to get some bridging finance, and she'd been to another broker back in May of this year, who had put her in touch with a lender who is getting quite notorious for their working practices. And will probably be closed down by the regulator fairly soon if they can get their mitts on them. But she ended up with, and she only got the money in September, and she was desperate for the money to continue this refurbishment. They lent to her limited company and took a charge over her home. The security she had on offer was unencumbered commercial security, semi-commercial security worth £2 million. They took a charge over a house.
Wow.
Absolutely, I mean, atrocious, absolutely atrocious. And they only lent her 40% of what she needed.
Wow.
Because they work on a 90-day value. And I'm coming across this lender time and time again, unfortunately. And it's this type of lender that leads to regulation being put in place by the authorities because they think this is common practice, and it really isn't. Yeah. It's just cowboys.
And that's exactly the type of lender that gives bridging a dirty name.
Exactly. And I sat with the lady. I drove down to Dorset to see this lady because she was in such a state. And I sat there and I spent most of the time with her, which was a good couple of hours, just shaking my head because of how she'd been treated, what had happened. And it was just diabolical. So we're sorting out something for her now. Once that's gone through, she wants me to help her write a very, very long complaint letter and also write to the FCA.
Yeah.
So then that's probably what's going to happen. But of course, do I want to bring it to the regulator's attention? Well, I probably should do, but do I want to? Not really, but I'm going to have to. Okay, no more questions. Sam, thank you very, very much. That was brilliant. Thank you. Can't thank you enough for that.
Having me.
We will see you. I will speak to you, no doubt, very soon. In fact, I need to speak to you probably this afternoon. So I'll give you a call. Simon will remove you from the room.
Thank you.
And welcome you back again soon, hopefully.
Thank you. Have a great afternoon.
Thank you. The reason for the pause is that I've been asked just to leave a little pause so that when we edit these, they can cut out the last bit, which is obviously me talking. So it's now on to me. I'm going to try my clicker again. I've changed batteries. I've done everything I possibly can to it. We're going to see if it works. If not, I need to go back. We need to get Sam back. Sorry. Simon, can you get Sam back? Just guess who's just remembered we've got a prize draw we've got to do, which I need Sam's involvement. So we'll try and get Sam back. If she's still there. Is she still there? My apologies, everyone. She's still here. Sam's going to put you back in the room. You just got to 20 seconds just to help me do your prize draw, which you very kindly donated to. I'm going to get your slide back up as well because that actually shows this, which is the slide we should have gone to. So one lucky delegate wins 100 quid. This should take a couple of seconds. She literally just needs to give me a number. And then we can. So the way this works quite simply, I ask Sam to give me a number between 1 and 68, because that's everybody that's been on for the entire time. And she's not there. Okay. Sam, could you just give me, if you're not able to come back, can you give me a number, please? Just type it into the notes box, a number between 1 and 68, please. Any number at all. Okay, so I'm going to call out number 37. You have to actually just say, yes, I'm here, or say yes, or just acknowledge that you're here. So number 37 is Lisa Andrews of Andrews and Bar Limited. Lisa, if you're there, if you can just say yes, then you've got £100 coming to you. If not, we're going to have to call out another number. We'll give it 10 seconds. Don't know where my head is today. I really don't. No response. Okay, I'll have to. In that case, Sam, can you call me out another number, please, between 1 and 68? 61, and that is Rory O'Mara from Closed Bridging Finance. I'm sure Rory was watching Sam speak, because hello, there he is. Rory, you've got £100 coming to you. Glenhawk will be in touch to get that arranged for you. So congratulations. Okay, so just going to go back to where we should be then, which is my presentation. Apologies for that. I had it right in front of me as well and still forgot all about it. It's an age thing, it must be. So the last part of the presentation is what I want to talk about today. I'm going to cover just a little bit on commercial and semi-commercial mortgages. Obviously, we always try and cover every subject wherever we possibly can, and this was the one that was missing today. So I'm just going to talk very briefly about owner-occupied investment deals, and something that actually follows on from what Sam was saying about seeing a broker who was worked opposite at the site of where some houses were being built, and there was other stuff going on down the road. This is quite similar, actually, which I'm going to come on to. So it's a little bit about, are you missing out? I mean, a lot of you probably don't entertain commercial, semi-commercial deals because you think you're not sure what to do. You're not sure how much money's in it, that sort of stuff. Well, quite simply, if your customers don't know that you can offer commercial, they might be going elsewhere, of course, to look for finance, and that could be going somewhere else that also offers buy-to-lets and regulated mortgages. We've currently got a panel of 20 lenders offering, I think it's just over 20 now, but it's 20 lenders coming up on the next slide, with products ranging from prime to major subprime. So even for the ones that really have some serious problems. And many, many thousands, and we were seeing this because we've been involved in commercial finance for quite some time. And some of the stuff we were writing with Interbay, Shawbrook, even on 10-year terms, has now come up for renewal. And of course, they come off rates of 3-4%, and they're now jumping up to 8-9-10% potentially on a standard variable rate. And they're going, help. And they do need that help, because there are some much better deals out there. Because of course, they might have been a first-time commercial landlord at the time. Now they're not. They're an experienced landlord. So it's a different situation. This is who we've got, quite simply. All of the high street. There's a few private lenders we've got as well, which I haven't got on here. And then all the ones that will look at the stuff that's sort of semi-commercial and the more of the challenger bank type situation. So it's a fairly wide spread of what's on offer. Why offer commercial mortgages? Well, the first one, our average commission over the last 5 years that we paid out to broker partners has been over £4,000 per case. That's quite a bit. And quite often, most of the time, I would say, our broker partners will phone us and say, got this commercial deal. Can you give an indication what the rate might be so they can go back to the customer? And then they'll come back to us and say, right, here's the name, telephone number, and email address. Can you make contact? And that's it. And they then sit there. They get regular updates. They can check the notes. They can go online case tracking to see what's going on if they wish. And then all of a sudden they receive a fairly sizable amount of money come through to them for quite literally just doing absolutely nothing. And it helps you retain more existing customers, as I said, and also attract new customers. I've got there, for example, this is just to remind myself of how you can attract new customers. I've lived in Berkhamsted now for 16.5 years. In that time, whilst I've still got some hair anyway, I've managed to arrange loans or commercial mortgages for 3 hairdressers in our town. I've just got chatting, and yeah, what do you do? I do this. Oh, I'm looking to buy this property. My landlord's basically wants to jack it in and wants to sell up. So he said, I'll have first refusal on it, which is great. But they've been to their bank. Bank said no, and they think, okay, I haven't got any other options. We've helped 3 so far. We've also helped another hairdressers, but we've actually helped the landlord of that hairdresser. So just by actually speaking to people and saying what's available, you'd be amazed at what the type of business you can get in. And these aren't small deals. These are sizable deals that people have taken on. And it's earned a great deal of money for us, especially as they've been direct as well, of course. So which is obviously great for us, not so great for somebody that could have introduced it to us. And we can arrange finance in literally any type of commercial building. There might be a couple of exceptions, but I was trying to think last night what they might be. I even end up on Google trying to find what they might be. It's quite literally anything. Obviously, I won't read all these, but you can just see from that. Offices, shops, anything on the high street at all. I mean, I mentioned earlier on about how many coffee shops there are in Berkhamsted. It is a ridiculous amount. Restaurants, coffee shops, and charity shops it seems to be the thing at the moment, and not a lot else. But all of those, dentists, doctors, hairdressers, obviously, care homes, huge business, absolutely enormous, and many, many, many more. So if you're not involved, spread the word. Let your clients know that you've got, if they have commercial property, if they want to invest in commercial property. I mean, many buy-to-let clients, buy-to-let landlords are now looking at semi-commercial properties because there's not the same tax implications. Commercial properties where they can get a tenant in who they can get a potentially long-term lease, and it can be very, very profitable. And solution. So I put this last night. It was about 11:45 I did this. So if you don't know your EBITDAs from your property use classes, or just need an access to a lender on the closed panel, Yorkshire Building Society, for example, very, very closed panel. Don't deal with very few brokers. Actually getting an agency with Yorkshire Commercial is like applying to the FCA for authorisation, quite seriously. And we was invited to join their panel, and it still took months because they are so stringent. Give us a call, quite simply. Speak to my head of department, Jo, and she can then basically let you know what the options are. And if you've got a client that in mind, she can let you know what the options are. So, okay, so a little bit about Specialist Hub. If you don't know us, I mean, I'd say probably half of you here today have either dealt with us or have attended before. So this is just a little bit about us. Our service, quite simply, we've been doing this a long, long time. I've been doing it, as I mentioned earlier, on 40 years, and I've been running my own companies now for 34 years. If you want to give the advice to the client and we package it, we can offer that. If you want just to introduce a case because you're either not sure what to do or you just can't be bothered, then we would give the advice and still pay you pretty much the same as if you wanted to package it anyway in most cases. But you have the option, and it's not a one or the other for all your business. You can pick and choose. You can do some types of business package, some types introduced, however you want to do it. It's entirely up to you. Just advise us on each case, quite simply. And it's not, why are we different? It's not the products we offer, because we offer it the same as everybody else. Let's face it. All right, we're classed as a packager, but we also give advice to probably 70% of the clients that come through us. But it's our lender relationships, which is absolutely key. Can't stress enough. I mean, you probably all know, you've all had situations where you've spoken to somebody higher up, for example, within a lender that's actually got a deal through. An underwriter was adamant, was a definite no. We've all been there. I'm there quite often, unfortunately. It's a very common occurrence because, unfortunately, the quality of some lender staff is not what it should be. Lenders are struggling to get quality staff on board, and therefore it's easy to say no sometimes than to actually make a decision. So having lender relationships with people at a senior level, absolutely key. It's the people we employ is the main reason we're different. A minimum of 5 years experience before they can even get in for an interview to get a job here. Absolutely key. And I insist they are mature with life experience. And that's not discriminated against younger people. It's just that you need 5 years experience. And I far prefer, if I've got two people up for a job and one is 35 years old, has that life experience, and when I speak to them, they come across very well when they're speaking, or you've got somebody who's 18 years old and talks in tech speak, you can probably see which one I'm going to choose. I'm going to choose the one with the experience and also the life experience. And on the rare occasion, that's the one thing about employing people that know what they're doing and have got that, they're not going to hide, they're not going to sort of, hide things under the carpet. If something goes wrong, they're going to deal with it because they recognize early on that something's gone wrong, and they will deal with it. They'll bring it to my attention or just deal with it themselves and get it over and done with. And we've not had a complaint since lockdown. And that complaint was from a client on a self-build who was complaining to us because she thought she could get away with not paying a fee, when it was a lender that had a 30 working day turnaround on replies for someone who was doing a self-build. So she was rightly cheesed off, but cheesed off at the wrong people. But she was trying to get out of paying a fee. And why are we different? It's not our numerous awards from the financial press. Those of you who've seen these before know what my thoughts are on the award system. Lenders, fine. Yeah, we can all vote for lenders because we use them. How many clients are actually voting for brokers? Very, very few. You'll find the brokers that are winning these awards over and over again. And there's brokers out there. We've won 80 awards in the last 15 years. Well, we know why you've won 80 awards. We know why you won one award, one broker, you won one award 9 years running. It's because you go on Facebook and basically ask all your mates to vote for you. That's not winning an award. That's just making out you're better than you actually are at what you do. So it's not something I would ever entertain. I was thinking actually of, just for a joke, maybe entering one of these awards, and then if I did win it, not getting up from my chair and actually going and taking it, just to see what the reaction would be, because I can't stand them. I really can't. I think they are the most corrupt part of our industry. It really is, and I wish it would disappear. It's how seriously we take the compliance and the prevention of financial crime, and this is something we're very, very hot on. The NACFB tell us our compliance is second to none. In fact, a country mile ahead of any of our competitors. What they told me on the first one that we did, and we are active in the prevention of financial crime. Our anti-money laundering and KYC procedures have been adopted by 3 lenders because they are so good. So it's something we take very seriously, and I always have taken seriously. Nothing I hate more than actually arranging finance for somebody that turns out they were not who they said they were. And it has happened a couple of times many, many years ago, and it really used to cheese me off. So it's something we're very, very hot on. What else can we offer? One underwriter from start to finish. Very, very important. You don't want to be dealing with half a dozen different people throughout the process. So it's one person takes the call. The only time anyone else will get involved is me, because I pay your commission on the day of loan completion. As long as I've got your bank details, of course, and as long as I've got your right bank details, because we do sometimes get sent over bank details, and it turns out it's from an account that was either closed or the numbers are mixed around the wrong way. So as long as I've got your bank details, day of completion, it's something we do frequently. No commission clawbacks, unless it turns out to be fraud, or, which obviously hasn't happened in years, or the client cancels the contract within whatever time period the lender will allow. Sometimes some lenders allow a 14-day cancellation period. Again, that hasn't happened in years, so I haven't had to claw back commission in years. So there's no commission clawbacks. We also offer, we don't offer this externally. This is something we have, but the reason I say is what else we can offer. This is so accurate and so good that it means we source most of our own business internally. And to give an example, I mean, loan quote is for our second charge side. Bridge quote is obviously for bridging and refurbishment loans, and commercial quote is for buy-to-lets and commercial, and also a lot of lenders that don't show up with the normal searching systems that we've incorporated into it. But as an example, last night UTB changed their fixed rate, lowered their fixed rates on their 5-year fixed rates on second charges. Now, for that to appear on any of the sourcing systems could take anything between 3 and 7 days. They sent the email with the changes at 5 o'clock. It was changed in our system at 20 past. So we was immediately quoting lower figures straight away. So that's why it's so good, and that's why it's so accurate. And we've had to bring these out. There isn't really anything out there that's accurate with regards to regulated bridging, for example. So you're dealing with a regulated product. How do you know who's the cheapest lender? Who's the right lender for that particular client? Well, we do, because we've got our own system. And if any of you call us and say, I've got this client, can you give me some figures? We can quite literally do it within 90 seconds. Literally that quick. And you'd have a PDF on your email that will show you what the terms are. As simple as that. Keeps it simple. It means we're not doing loads and loads of research when we've got a system that actually does it for us, and it is kept up to date. And it was actually, all these 3 were written by myself. So, and I'm the one who keeps them up to date, which is lucky when things like I'm a Celebrity is on, or what's the other nonsense my wife watches at the moment, Married at First Sight, and there's another one. Oh, Big Brother, of course, is on. I can't stand any of those programs. So while she's watching those, I'll be sitting at my laptop getting everything up to date if anything's been released late in the day. Our products, this is our product coverage. As you can see, I'm not going to read all of these out, but it's basically anything, everything except for equity release, which we don't touch because we don't really get the call for it. And it's not a product I'm overly keen on. So all of these products, as you can see, we introduced probate loans a while back because we're seeing an increased amount of people looking to get finance out of someone's, like a close family member's will, for example. So that's something we've also introduced and have a panel of lenders. Sorry, start to lose my voice there a little bit, so taking a quick sip. A little bit, this is just going to second charges to give you an idea of what people say about my team. Again, I won't read all of this, and I'm going to update this for the next time we have, because we've had quite a few come through recently. But I won't read all of these, but this is quite simply, this is from your customers. This will be from your customers. I'm truly impressed, extremely supportive and understanding. It's not an exaggeration to say you're a tremendous person. That's the sort of feedback we get. We've not had bad feedback in years, literally years. We get bad feedback about lenders, and we get bad feedback about solicitors, but we haven't had bad feedback in years. So we must be doing something right. A couple of case studies. This actually is about to come to fruition. So this is somebody we've now done 2 bridging loans for, originally back in 2021, for a 20-bed property with planning for a 10-bed HMO. It took ages to get the planning sorted out, so they had to renew it in 2022, and we are about to repay the advance with a loan from Shawbrook on a term product. So this will be 3 times we've earned from the deal. The client's seen a significant gain in the value of the property since he's done what he's done. And our our broker partner, will by the end of this month have earned over 75 grand from this one deal, so, which he's obviously quite happy about. But we got a happy client as well, because there's nothing they could do about the planning side of things, because of it was just post-COVID and maybe not the greatest time to buy a property, but they did get the property for an absolute steal. So this will be the 3rd time we've actually helped this client, and that was Rome who helped out both times. Excellent lender on our panel. Another case study, quite topical at the moment. Very wealthy, incredibly wealthy, 80-year-old expat and his eldest son living in Israel for the last 20 odd years, refinancing 19 properties. This is the most difficult case I've ever been involved in, by the way. In all the years I've done this, and I've helped tens and tens of thousands of clients over the years, or my companies have certainly. So 19 properties, 2 properties had regulated tenants, 6.4 million refinance of a nationwide facility that had expired, and they were crawling all over them. They were about to call in the LPA receivers and everything else because they didn't think it was actually doable. 5 properties had mortgages still registered that were repaid 16 to 20 years ago, because unfortunately, because these clients have lived in abroad for 20 odd years, all the people that were supposed to be helping them, and because they were so wealthy, had just been leeching off them, quite simply. So solicitors saying they'd done stuff that they hadn't done, property managers saying they were doing stuff that they hadn't done. It was horrendous, absolutely horrendous. Even one property where the lease should have been actually applied for at Land Registry in 2006, and the solicitor never sent off the paperwork, which we found. And when we reported it to him, he said, "Oh, I'll deal with that." And he then actually applied. Then it's 15 years later. Absolutely disgraceful. I say most difficult case we've ever dealt with. And this is actually one of the guys that I mentioned earlier on, who has retired from the business. And this was one of his clients. And he earned £45,000 from the case. And he did nothing, literally nothing at all, other than pass over name, address, telephone number. And that was it. So obviously a happy man. This is what he said. I won't read all of this, what he said on Trust, but if I could give more than 5 stars, I would. Tony and Joe had the patience, experience and depth of knowledge to complete this very large project. I've introduced many more cases to Specialist Hub, additionally dealing with Hayley, Kirsty and Sakina, and I found them all responsive, dedicated, success and fun to speak with. That's the other advantage actually of dealing with someone who's got a bit of life experience. You're not dealing with a robot. You're actually dealing with somebody who has a personality, of course, which always helps. Another case study came to us in the middle of lockdown. 2 very, incredibly, probably the wealthiest clients I think we've ever dealt with. I can't go into too much detail, but because of their ages, came into us in the middle of, I think it was May 2020 originally. Try doing a search for anybody in May 2020 who's 86 years old, who's looking to refinance and buy-to-let properties. There wasn't a lot about, as you can imagine. So we did this one. This is probably the second most difficult case I've had to deal with because of the client's expectations, because they couldn't see why we couldn't lend to them at their ages because of who they were. When it had nothing to do with who they were, it's because of their ages and because lenders just weren't willing to lend at the time. We managed to get this one through, and our broker partner earned just under 30 grand on the day of completion. And we've just started refinancing all of these products because their 2-year fixed rate is about to expire. So we're now doing the whole lot again, but there's now many more lenders in the market that are available to help, of course. So, okay, and it's not what you know, it's who you know. I'm going to take a quick sip because I can feel my voice going again. And probably some of you have heard this one, but I will keep mentioning this one probably until the day I retire from this industry, because this is the best example I can ever give you. If it's not what you know, it's who you know. Couple running 2 children's nurseries. He was actually an airline pilot. So he left everything. He left the running of the nurseries to her, but he did all the financials. That was his role within the business, but an airline pilot. He defrauded HMRC of 850 grand. Didn't pay any tax or national insurance over for 18, I think it was 18 years. And HMRC only found out when a member of staff contacted them about their tax coding and said, sorry, we've never heard of you. You've not paid any tax and national insurance. We've not got no records. So investigation, arrested, 5 years in prison. She divorced him. But all of the assets, because all the assets were in joint names, every single one had a Proceeds of Crime Act charge against it. Every single one. And of course, the first thing you have when you've got a Proceeds of Crime Act charge with a lender is reputational risk. We can't lend to these people because of reputational risk. What if it gets in the papers? And that didn't quite seem right to me, because this woman was going to lose everything. She's going to lose her business. She's going to lose her home. She's going to lose the buy-to-lets that they had, all because her husband decided to spend 800. She didn't even know he'd done 850 grand. He'd spent it on things that she wouldn't have known about, because let's face it, she would have probably divorced him many, many years earlier if she realized he was spending it on cocaine and prostitutes, which is where it was going. And he was an airline pilot. So what did we do? Declined by multiple brokers and multiple lenders as well because of reputational risk. Quite simply, we did this. Contact my underwriters, contacted Together Money. And of course, their compliance department came back and said, no, can't touch that reputational risk. Handed to me as a decline, because I see all declines just to see if there's anything we can do. And I made a phone call to a director at Together Money that I've known for 35 years now. Explained the deal to him, and he said, well, why wouldn't we do that? I said, because your compliance department doesn't want to. He said, give me 10 minutes. Went away. Big difference between a director of a large company walking to a compliance department and an underwriter, because the compliance department has to try and justify then why they made that decision, and they couldn't. He came back to me a short while later and said, yeah, we'll do that. So we managed to save her house. We saved her business, both businesses. She kept her buy-to-lets. Every single one of those has now been refinanced onto with high street and mainstream lenders. Every single one. And every time I speak, this woman now rings us on a regular basis because she's doing other stuff with us. And every single time I speak to her, she says, I still cannot thank you enough, because you basically saved everything I had. Literally everything. That's from one phone call, because of my relationship with one person at that particular lender. And no other broker was able to do that she'd been to. So it's not what you know, it's who you know. So if you want to submit a case, I'm going to go through this really quickly, because this office is like a fridge and I'm so cold I can barely actually press the clicker anymore. Complete our feedback form. Complete our feedback form, cover the type of inquiry you have, and we'll call you back. That's coming up very, very soon. You can also complete a decision in principle form we've sent you. There's one for every product. They're very simple if you want to do it that way, or you can go on the website and submit the case online, or go old school, just pick up the phone and speak to the team. They're ready to take your call. Any of those ways you want to do, it's entirely up to you. It could be just a name and telephone number and an email address, or you can go through it in greater depth if you want to be involved. Entirely up to you. If one little question, I'm trying to get us up to 1,000 followers on LinkedIn for Specialist Hub. I'm currently, as of yesterday, I think it was last night, at 954. So I only need a small number. So if you haven't followed Specialist Hub on LinkedIn, and you are on LinkedIn, please do so. I would be very, very grateful, because that's the target I've set myself for this year. So please, if you can go on and do that. And of course, also link with me. If you're not linked with me, you probably get a request if we're able to find you. But if you haven't got a request, then please link with me. If you'd like what you've seen today, and you have already registered with us, by the way, so you registered by actually registering for today's show. But to actually receive commission, you'd need to actually sign one of these, or apply online and do the online broker registration, because that obviously covers what you need to cover as well. But I need that to pay commission to you. Future shows, we haven't announced our 2024 shows yet. We're going to announce those shortly. We're having a meeting. I was waiting on Kylie, my head of marketing, to come back from an operation. So when she's back, we'll be going through what we're doing in 2024. Probably a little bit of the same as far as dates are concerned and the number, but we're going to try. I want now to revamp this completely, with a completely different look and the way it works. So that's coming up in you basically keep an eye on your emails. It's coming up. And also remember, you can register for as many of these as you like. We always try and get different lenders to each. We've got a pool of about 25, 26 lenders now. So there's always going to be a little bit of duplication from some lenders, but we try and make sure we cover at least 4 topics, sometimes 5 topics on every single one. So again, you can register for as many as you like. Just watch this space. Coming up, as I mentioned earlier on, coming up on the 22nd of November, my friend Colin Sanders, who's going to be talking about everything bridging and a lot more. And this guy's involved, as I mentioned earlier on. You can see his track record there. guy really does know his stuff, and he just does it now because he enjoys doing it. He probably doesn't need the money, but he does it because he really does enjoy what he does. So please, that's coming up in, what are we now, 13 days. And actually 22nd of November is 19 years since Specialist Financial Services was set up, or actually started trading. So maybe we'll have a party, who knows. But please join us on that one. That's going to be really, really good. 2024 Sutton Specialists are coming up. We've got, I mentioned that iGroup was probably the largest along with GMAC. Well, I've got the former CEO of GMAC also speaking next year, Simon Knight. We've also got Josh Knight, no relation to Simon, who's the Sales and Marketing Director of Obtain Capital. Roger Morris is coming back, Sales and Distribution Director at Tandem Bank, to talk about various things. We've currently planned that with him as to what he's going to be talking about. But we'll probably see Roger maybe twice next year as well. And we'll also have Anna Lewis, Commercial Director of Castle Trust, speaking, and another two who we've currently said yes, they will, but we don't want to announce it yet purely because they'll probably be later on in the year. So they are to be announced fairly soon. But as you can see, there's one male, one female. Well, yeah, definitely a female. So feedback and giveaways. Now you will now see towards the top of the screen a little orange button will appear. Don't click on it yet. This will take you to, so when you leave today, which is in about 3 minutes, click on that. It takes you to the feedback page. Complete the feedback for us, which I'm going to come on to reasons why you should complete the feedback in a moment. And also, if there's any downloads you want to do, so you want to download the GDPR compliance, our product commission guide, you can do that. Register for future shows, or certainly Sutton the Specialist show, you can register for that because we've only got one. But anything, all our downloads are actually there, so you get it all in one place. And CPD, as I mentioned earlier on, will be emailed to you by close of business tomorrow. And as I mentioned before, if you do not receive, check your spam first, then give us a call, because, and you might be the 1% of people that is not, it hasn't been received for some reason, but 99% of you will have it in your spam. So then, as I said before, just add us to your safe senders list. Feedback, as well as the feedback you got, if you've really enjoyed today and you want to leave some external feedback, we're trying to get our reviews up on Trustpilot and Google. We just go and search for Specialist Hub and go and just leave us a quick hopefully 5-star feedback. That would be fantastic. These are free for everybody involved. We don't charge lenders for these. We basically, all the costs that are involved in this is something that we pay for, and these are free. And obviously we do the giveaways and everything else, but please leave us some feedback. That would be great. A big thank you to today's sponsor, once again, Quantum Mortgages. Give us a call if you've got any cases you fit on Quantum's criteria, or just really want some figures. We can give you the figures instantly and let you know exactly what they can do. And also a big thank you again to Glenhawk, our prize draw sponsor. And apologies for completely forgetting about the prize draw, even though it was on the next slide and I had a bit of paper in front of me. And I think that is it. Enjoy the rest of your day, and we really hope you'll join us again soon. Thanks for attending.